enable submission of documents from time to time with no limitation, and avoid emails as claim examiner may be away. Also, the system are able to print out all the letters sent out for your easy reference, which is a good thing. So we encourage you to use the Ferryman Merriman system at all times. So next, I will talk about the reminder of market conduct essentials for intermediaries, which is very important. The intermediaries must provide product disclosure sheets to customer at pre-contractual stage and at times of renewal, because in these product disclosure sheets, it spells out basic information on the product such as benefits and particularly on major exclusion. For example, we have one product that is called Great Eastern Shield Act. We have 7 plans for customer to choose upon. One situation is a young customer may opt for a lower plan as he can only pay lower premium that is affordable to him as compared to an older person who wanted a higher plan with higher premium affordable to be paid by him. In short, we need to ensure we can manage customers' expectation. And along the way, agent must be able to provide suitable advice and recommendation to the customers based on their needs and objective. And please be reminded that this year we also have 6 mandatory e-learning that need to be complete before the year end. For existing agent, we would advise you to complete it as soon as possible to prevent GEG link login issue at the end of the year. And at the same time, for the new agent, kindly get it done within half year from your appointment date, because if agent have not fulfilled the e-learning in the given period, there will be consequences such as the front system will be deactivated. Next, this is something very important, which I'm sure most of you already know, which is do not use customers' data without getting customers' consent, or in other words, PDPA, Personal Data Protection Act 2010. It spells out that under the general principle, when we meet the customers to get their personal data, we must get their consent from them, otherwise you cannot proceed further. If 3 months down the road, same customer is to buy another product from the agent, a fresh consent is required for the same customer to release his or her personal information to the agent to proceed further. And do not induce customer to purchase or renew insurance product by misrepresentation or use any sales brochure or illustration that are not authorized by GEGM, because it is actually against the law of codes of ethics. For example, you tell the customer to buy the product by today, and if you are not buying today, the premium will be much expensive tomorrow. So you induce the customer to purchase things by not actually telling the truth. And at the same time, we are also not allowed to exert undue influence or threat customers to purchase insurance product or in demanding insurance premium. For example, let's say if you are already proposing a product to the customer and give them few days to decide, I think it's quite fair, but however, we cannot be seen very aggressively to chase the customer day and night to close the deal. If they find it threatening, they will complain to the Bank Negara, and Bank Negara will come back to the insurance company, and there will be disciplinary action taken. So bear in mind, please do not do this. And by this, I have completed the reminder of market conduct essentials for intermediaries, which is very important for agents to take note. And the next thing to highlight is also something very, very important, which is know your customers. We have posted a circular in July 2024, a reminder to say that you must observe your customer requirement prior to policy insurance. In other words, it links back to the reminder of market insurance product essentials that you must be honest when dealing with the customer. And not only that, we have to ensure that the customer's information is accurate and verified and correctly submitted prior to any policy insurance. Inaccuracy info provided when claims arise could be complicated and cause delay. So kindly take note for these important reminders. And lastly, a reminder to intermediaries who have not submit your TIN number yet, kindly submit it as soon as possible. Without TIN number, GEGM won't be able to create self-billing and generate commission for the agents. And for corporate clients, please provide us the TIN number, as failing to provide, we won't be able to generate e-invoicing for corporate clients if they want for income tax purposes. So that's it for the reminders. And without further delay, I will pass the floor to Mr. Yap.
Thank you, Aida. Okay, I shall now share with you my slides. Uh, so you got to make me the presenter. You got to.
I did make you the presenter.
I can't share. Okay, we can.
Okay, all right.
Can everybody see the slides?
Yes, yes. You can see the
Okay.
slide.
Good morning to all agents. I think Aisha has already introduced myself. I'm the technical advisor for Great Eastern General Malaysia. What we're going to do today is to present to you the product knowledge for fire material damage, or everybody knows the product as the fire insurance policy. Yeah, we are going to cover. This is what Aisha has already done. Okay, what we are going to do is we want to look at the definition of fire and their content. What does it mean actually? What does fire actually means? Then we will look into the four basic parts of the policy. The first part is we call it the declaration or the schedule. Second part is what is the insuring agreement that we are actually covering, and that the insured is actually buying the policy. What does it cover? How does the insurance companies pays you? Then the policy will have certain conditions. We'll go through the conditions of the policy. The policy also will have some clauses, some endorsement, or even some warranties that is applicable to a particular insured. It doesn't mean all insured will have all the same type of clauses, endorsement, warranty. It depends on the individual customers, individual occupations. Yeah, because certain warranties, certain endorsement doesn't apply to certain type of customers. We will go through that in detail later part in the morning. The second part, we'll look at underwriting. How do we rate the policy? What kind of risk exposure do we look at? And we look at some computation of how we rate the policies. Yeah. So this is what we're going to go through maybe until 12:30 today. Okay, let's look at definition and elements of fire. What do you mean by that? Okay, what does fire means? Everybody talk about fire, but in the context of insurance, what does a fire constitute? Yeah, you must have the following elements before the fire policy actually comes into play. Yeah. Number one, there must be an actual burning or ignition. That means to say, from a physical eyesight, you will see a fire burning. Basically, in short, can say that lah. An example will be electrical short circuit causes a fire in a building, and is considered would be actual fire because the electrical short circuit has ignited and causes the fire, and the building was burned. So we consider this as actual burning, or there's an ignition. The second part is there must be something on fire which ought not to be on fire. That means the particular item that is on fire should not be on fire in the first place. Yeah. What I put in example is, let's say you are trying to do a barbecue. You use coal to actually put in your barbecue stand, and you light up the coal, and the coal is starts burning, and you enjoy your barbecue. So you can't be claiming the coal because the coal is supposed to be on fire anyway. Because you need to light up the coal for the heat to actually barbecue your whatever items you want to eat. Yeah. So that kind of thing you can't be covering it because you're supposed to be on fire anyway. That's what the sentence means. There must be something on fire which ought not to be on fire. That means the coal is actually on fire. You light it up, so it cannot be covered. Yeah.
Mr. Yap,
Yeah.
sorry for the interruption. I think the slide is not moving.
Where are we
Is
now?
yeah,
We're still
it's
in this,
still
is
on.
it?
Yeah, it's still on the first slide.
Now? Is it moving?
Yes, it's not moving.
Oh, okay. So is it okay now? No, it's not okay, is
Still,
it?
yeah, still not moving.
Okay, never mind. I'll restart again and see what happens, right? Because my
Right, sure.
my my screen is actually moving. Let's stop sharing again. Then I share again and see what happens. Can you see the slide now?
Yes, I can.
Now? Can. Is it
Is it
moving?
moving?
No, it's not moving, is it?
Yeah.
Is it moving now? The slide that I'm on is definition of fire. Can you see that?
No, my screen is still at the first slide.
First slide. Yeah. This slide, is
Yeah.
it?
Yeah, the title page.
This one. Okay, wait a minute. Let me see what I can do.
All right, sure. Oh, now it's moving.
We try again one more time.
All right.
Because you will see my slides now. The things afterwards. Okay. Can you see now? Is
Yes,
it
yes, I
moving?
can see. Yeah, it's moving. Yep.
Okay, okay. Thanks, thanks.
All right. Thank you.
This you have seen it just now, right? The contents of the course. Can, right?
Yes, yes, can.
So this one you can't see just now, right?
Yep.
Definition of fire. Can or not? Can see or not?
I can see. Yep.
Can. Okay. The rest of the agent should be able to see, I presume. If anybody can't see, then just let me know lah. Just give me a tinker.
Sure.
Yeah, can. Everybody can see right now.
Can,
Okay.
can, can.
So can. Okay. So we will proceed. I just explain to you again with this particular slide. How do you define a fire in terms of insurance, in terms of a fire policy? Yeah, number one, it says here there must be an actual burning or ignition. An example is when you have electrical short circuit, it causes a fire in the building. Is actually an actual fire burning, right? You can actually physically see the fire burning. So actual burning and ignition. Electrical short circuit is the ignition, and that ignition causes a fire. Yeah. The next thing, there must be something on fire which ought not to be on fire. Example is, let's say coal. You want to do a barbecue, you put coal, you light up the coal, and the coal will give you the source of heat for you to barbecue whatever food you want to do, want to eat. The coal that was burned is something that should be on fire in the first place. Therefore, that kind of thing should not be part of insurance cover because you intend the coal to be on fire in the first place, right? So that's why it means there must be a something on fire which not on to be on fire. Yeah, the coal is definitely something that you want to be on fire. So that one would not be covering it. Yeah. The third thing is the fire must be accidental in its origin as far as the insured is concerned and not willful or intention on the part of the insured. In other words, if a fire spread from a neighbor, it's actually accidental as far as the insured is concerned. The insured is the next door. So his house or his plant or his factory will also burn because it spreads from the neighbor. So it is not intentional but an accident. But however, if the insured itself sets fire on his own building, then it is not accidental anymore. It's a willful act. Therefore, this type of losses will not be covered under a normal fire policy. Yeah. So there are three elements. One, there must be actual burning or ignition. Two, there must be something on fire which is supposed not to be on fire, like your electrical short circuit in the house. That one is not supposed to happen, but it happened, right? So that's why it's the actual burning. Then you have the third element, it must be accidental and it's not a willful act of the insured. Yeah. So these are the three things under the definition of fire in the context of a fire insurance policy. The next slide, can see, right? The next slide.
Yes, yes, can see.
Okay. Then everybody is talking about fire. How can a fire happen? Yeah. We call it the fire triangle. Number one, for the fire to happen, there must be a heat source. There must be an ignition, right? The fire cannot start without an ignition, right? So a fire will start if the material gets too hot, right? Or ignition fire hazard provides the heat to start the fire. So when there's an ignition, when it gets too hot, there will be ignition. When there's ignition, then the fire can start. What are the common things that fire can ignite? You can have sparks from your faulty electrical equipment. There will be ignition, and when the sparks happen, it can create a fire. Then heat producing appliances, that means any item that can produce heat has a possibility of a ignition. Open flames, your static electricity can also ignite uh, something to cause a fire. Smoking, because of your cigarette butts, can also ignite a fire. But ignition cannot start the fire alone. There must be something that when the ignition starts, there must be something that can burn, which we call it the fuel. What is the fuel as far as insurance is concerned? The fuel can be the fuel is that something that burns and keeps the fire burning, right? What are those fuels? In insurance, we call them the fuel fire hazards, right? What does it include? It can include stock. Stock can get burned, can get heated, and the fire can start. Your raw materials like your box, your whatever raw materials, even your chemicals, even your plastic, anything, all can be burnt when there's an ignition. Your wood, of course, can be burned easily. Textile, plastic, all these are actually fuel that you have in the particular factory or even your house. Your own furniture, made of wood, is a fuel when there's an ignition that starts. Maybe your house, the electrical wiring is faulty, there's a spark in the electrical wire. When there's an ignition and your ignition is next to, let's say, something that can burn easily, that will be a fuel. Then the fire will start. These two elements actually cannot also start a fire. There must be a chemical reaction between this ignition and the fuel. Chemical reaction is actually the oxidizing agent, which is actually our normal oxygen that you can find everywhere in the air. That will then sustain the chemical reaction that allows the fire to continue. Without oxygen, the heat source, the fuel cannot continue to burn. So it can only burn when there's oxygen in the air, right? So that's why in here you see all these three elements added together. There will be a chemical reaction and the fire continue to burn because of these three elements. That's why we call it the fire triangle. You must have heat, you must have ignition, because there's a fuel for the ignition to start the fire, and there must be oxygen for the fire to continue to burn. right? So this fire triangle, that's how the fire starts, how the fire is it start continuing to burn and continue to burn until all your fuel is subsided, or maybe a fireman comes and dose the fire off, right? Okay, I hope everybody understand what a fire triangle is. It's basically how the fire starts. Yeah. Okay, let's now look at the four basic parts of the policy. First part, we're talking about declaration and policy schedule. If you receive a policy wording, the first page you may want to see is a schedule, policy schedule. We call it a declaration, right? The policy schedule, declaration. What is stated in the declaration or the policy schedule, it actually identifies who is the insured. The insured name is always in the schedule, right? The address of the insured and the location of the risk that you want to insure is also stated in the declaration or we call schedule. The insurance company's name will be inside there. The insurance company is going to cover the losses uh, because of certain losses. Yeah. The fourth part, the fourth thing that you can see is what do you want to cover, right? You want to cover your building, you want to cover your stock, want to cover your plant and equipment will also be stated in the schedule. Then you will also see your policy limit. That means the sum insured. How much you want to insure? 500,000, 1 million, 5 million, and things like that. In some policies, you will see a deductible, right? A deductible could be an amount where the insured has to bear when there's a claim. Example, if you are your deductible is $500, you will have to bear the first $500 before the insurance companies pays the balance. Yeah. Of course, there must be identification of the policy, which is the policy number. We also must know how long the policy will be covering the insured, which is the policy period. Usually in fire insurance is 1 year. You may find policies that's more than 1 year. That is because certain insured wants to coincide with this financial account where it's not when they start to purchase the policy, maybe the financial accounts is in March, but they start to buy in January, so they want to tie back with the financial accounts, maybe buy 1 year, 3 months just to tie up, or also because policy wants to tie up with the loan agreement, that may be slightly different. But in most of the cases, is annual policy for 1 year. Of course, very importantly, there will also be the premium amount that you need to pay. But insured needs to pay for this policy. And in the schedule itself, we will also see some endorsements, clauses, warranties that will also be applicable to the policy. We will go through this later on. What are the endorsement clauses and warranties? Those that is applicable to the policy will be stated in the schedule. So you have all these elements, all these items that you will find in your policy schedule. Now, the second part of the policy is obviously the insurance agreement. The insurance agreement is to state what are we covering you, what is the obligation of the insurers to pay you, and so forth. Yeah, that is agreement. What do we pay? When do we pay? When what do we cover? What do we cover for insurance companies to pay the insured? Okay, this is a summary of what you'll find in the first part of the insurance agreement. Basically, is the insurance company states what is covered under your policy. Yeah, this is the main part of the policy. First item. Sometimes we call it preamble. Yeah? In insurance term, we call it preamble. It's actually the insuring agreement. Right. In the fire policy, first, you will find that there is a standard basic cover. The standard basic cover, I think everybody knows, we should be quite familiar in the fire policy. There are three elements. There are three elements, which is number one is the normal fire that we will cover. Number two is a lightning strike that we will also cover. Damage to lightning, whether there's a fire or not, will be covered. The third part is explosion of gas used for domestic purposes only, not in the factory or plant. So it's only for domestic purpose. Then it is covered. Then is it all the policy is covered? No, not exactly. You can also add other perils to the policy. This is where the insured needs to decide whether I need this cover or not. Yeah. So it is an option for the insured to decide what should I add to make the policy more relevant to them, give them more coverage apart from the item fire, lightning, and explosion. Number one, aircraft damage to earthquake, volcanic eruption, subsidence landslip, food, flood, explosion, impact, damage, bursting of overflowing water tanks and pipes, Bus Dalang fire, electrical installation, AB, spontaneous combustion, damage by falling trees, storm tempest, and bright stripe malicious damage. We will go through every single one of these, the extra cover, so that you know which can be more relevant to your insured, right? Okay, so we will go through it in the next few slides. Before I continue, are there any questions first? Okay, no questions. We will proceed. Okay, before we even go through the extraordinary perils that they can add, we will give you an example of what is considered a fire loss. There are many questions asked. Is this covered or not? Is water damage covered or not? Is this covered or not? So in this scenario, that can explain to you, as far as the fire is concerned, there are certain things that happen during the fire are also covered. Yeah. An example, an incident, let's say the fire spread from a neighboring factory, for example. Of course, the building and the stock was partially burned. That means once the fire spreads over, that your insured building also got burned, but it's not fully burned, it's partially burned, stock also was burned. So actually, there is the actual fire damage. Just like in the earlier example, in the earlier definition, we say there must be actual burning or ignition. So there is actually a burning, there's actually a ignition, and there is a building that's on fire, and also as well as a stock, right? Then the fire department sends the fire engine over and starts to spray water everywhere. I would say everywhere lah. So certain part of the building, so that in the process, the water also damage some stock, because they need to spray water to certain areas that is not even burning yet, because this is to prevent the fire from spreading faster. So they try to wet the other section first, so that it will spread faster. Yeah. So what happens? Of course, when they spray the water, the certain parts of the stock will also be damaged by water. There's no fire, but it's water. But this will also be considered as a fire loss, because it's a process to stop the fires from spreading. So the damages suffered by the insured because of the stock cannot be used anymore because of water. Understand? But there's no fire, right? The fire didn't spread it to this section of the building, but the stock are all wet. So also damaged, so it's considered as a fire loss. The next thing, the firemen, when they comes in, they also need to go inside the building to spray water. So they can't get into the building because maybe the fire happened when the factory is not operating at night, maybe at night or early in the morning. So what they do, they may damage the door, they may break down the door so that they can enter the building. So the damages that was created by this fireman is also part of a job to extinguish the fire. So the damage by the fireman to the door, to the wall, so that they can enter, is also be considered as a fire loss, right? Because it is part of a process to stop the fire. Okay, then when there is a fire, there will also be intense heat. The intense heat can also sometimes contaminate or disfigure some of the stock, even though the fire hasn't spread to that area. But because of the heat, some stock is sensitive to the heat and deteriorated, disfigured, cannot be used anymore. This intense heat that damages the stock or whatever item that's in the building is also considered as a fire loss because it is due the intense heat is actually from the fire itself. So it's part of a fire loss. When there's a fire, there's also a lot of smoke generated. You can sometimes see maybe in some social media or some videos you see when there's a fire, there'll be a lot of smoke that is generated. Yeah, that kind of smoke can also contaminate your stock. Also can contaminate certain uh, equipment. Right, a lot of dust, smoke, debris can fall onto the machine and is damaged, cannot be used. So that kind of damage, because of the smoke, but there's no fire, is also considered as a fire loss. Yeah. So the element here, the conclusion here is that it doesn't mean the loss must be from a fire. A fire means they must be the stock must be destroyed by the fire. But things that goes to try and prevent the fire, trying to stop the fire, and there is damages due to all this process, will be also considered as a fire loss. Yeah, it's okay. Okay, now we go through the extraordinary perils that can be covered. The first one, we talk about aircraft damage. I think by the word itself is already quite clear that damage occasioned by the aircraft or other aerial devices that's dropped from the airplane will be covered. Yeah, of course, the exclusion is mainly quite straightforward, which is actually when the aircraft is landing, has permission to land, then it's not covered lah, because it's permission to land. Let's say permission to land, it hits something, then it's not part of this extension lah. Yeah, it must be accidental in nature in the sense lah, right? And you can see the photographs on the left hand side. If the building crashes to a build, if the plane crashes into the building, obviously, if you're covering the building and you're extending to aircraft, then obviously it is covered. Yeah. As far as this particular additional cover is concerned, uh, from what I know, many people don't extend because they always don't think the plane will come into drop from the sky and hit their building, right? So a lot of people don't buy this, but of course, these kind of things you'll never know. Even though you're not near the airport, the plane can flying over your house or your factory. Sometimes may have an accident, lah, right? But the chances of this happening is small. Hence, not people want to extend that, but obviously it doesn't mean you don't need to extend. But if you're uh, you want to protect your customer for anything that can happen, of course, it's always good to extend that. And the reason why the rate is only 0.05 is obviously because the incident is remote. That's why even the premium is also a lot cheaper because the rate is only 0.05. Okay. The next item is earthquake and volcano eruption. Obviously, I think you also can, based on the title itself, you know what it is actually extending. It's extending loss damage due to earthquake or also volcanic eruption. Volcanic eruption, I think we don't have it in Malaysia. So, but obviously earthquake we also don't have. But things can change. We already know Malaysia also have experienced tremor before, but of course there's no damage lah. Uh, Earth thrust is changing, so you never know. One day, the tremor can be more intense, and there may be some losses that we can suffer. Yeah, so we don't know. We don't know whether it is going to happen because Earth is always changing. The Earth crust is changing, so we don't know. But I do think one day it can happen because the tremors that we have encountered is getting a little bit stronger and stronger uh, every time lah. Yeah. So you never know lah. This can happen. Yeah. At this moment, no lah. But future, nobody can say lah. Something like light sleep. Uh, Again, the title already says itself that lots of damage caused by subsidence and or heave on the ground where movements of the soil becomes loosened and there will be a landslide or subsidence. Yeah, this can happen especially when you are on a higher ground or when your houses are built on a slope. This chances are it can happen, yeah, because of movements of soil under the ground. However, this extension excludes loss of damage to or resulting from movement of soil floor slabs unless the foundation beneath the external walls are damaged. That means, if in short, if there's a slight movement and your floor slabs cracks and there's no damage to your foundation, it is not going to be covered. It's only covered when your foundation is found to be damaged itself or weakened. Then the cracks that you find maybe in your floor tiles or things like that will not be covered. Yeah. An example that I can quote is if you live in a condo, after a while, all the floor tiles can get loosened and it cracks. Yeah. That's because of the wet element in your floor that can causes dryness in the cement that they use to stick the tiles. So it happens. That kind of thing would not covered. Yeah. Or even if you are landed house, your tiles, because there's some movement in the under the ground, some of the tiles may loosen or crack, but everything is still okay as far as the house is concerned. There's no safety concerns, just that some floor are cracked. So that kind of situation is actually excluded under this policy. Yeah. The other part is swimming pools, terraces, patios, drives, pathways, walk gates, fences, unless the building is damaged at the same time. That means if you have a swimming pool, you have a patio, you have a driveway, those areas that is also cracked, right? Or your gates, walls, your walls, gates, or fences outside your building, outside your house or your building collapse, and your building is still intact, no damage, then this is also an exclusion under this landslip or landslide. However, if you want to cover these particular items, then you can actually extend. You can extend by paying additional premium of 25% of the perils rate, which is 25% of 0.081%. That's the rate that the insured needs to pay to include this subsidized landslip. There is an excess that insured needs to bear, which is 5% of sum insured and or 25,000, whichever is lower. Yeah. So in short, most people will want to buy this, especially when they know they are living on a higher ground or on a slope and and so forth. Yeah. But if you have a fence outside that maybe you have a retaining wall outside the fence, retaining wall that the fence sits on, maybe that one landslip can also happen because movements of the soil within that what you call that fence where it was built on a slope. Yeah. So in other words, most people will extend, especially when you're on higher land. Yeah. And also whether the house was built on the reclaimed land. Reclaimed land sometimes you don't know. There may be some sinkholes that can happen after many years later. Yeah. Okay, flood. Flood obviously is something that has happened that and will happen, will continue to happen in Malaysia. We always think flood is not a big concern in maybe 20 years ago. Now you find flood happening every year, right? So it's something that you should consider, definitely including it. We don't know when flood will happen. Yeah. What does how you define flood? Yeah. There's a definition of what we consider as flood. It's overflowing or deviation from normal channel or either natural or artificial water source. Of course, it is overflowing of normal channel maybe is your normal river that the water flows, the river can overflow, it's flood, or even from an artificial water course. Artificial water course could be you build a drain outside, the drain all clogged. When heavy rain comes, the drain that was built to channel the water out has don't have the capacity to or time to drain all the water out because of heavy rain. It overflows and the whole area is flooded because the drainage is not functioning as good as what is intended to lah. Yeah. Yeah, too heavy. The water is too heavy, and that is also covered because it is considered as a flood. That's why it says artificial water course. Yeah. Bursting or overflowing of public water means is also part of a definition of a flood. It means if your house or a factory is just in the vicinity of a one big public mains, that means the public water mains is flowing right maybe nearby your factory, and that one bursts. And when it bursts, all a huge of water will be coming out, and the contractor that's going to fix the damage is not going to come so soon. Maybe they only come maybe 24 hours later, and the amount of water that has overflowed from these uh, pipes may also cause a flood in your particular area. Yeah. The last one is accumulation of water originated from outside the building is like maybe similar to say your drainage cannot withstand the heavy rain, the water has accumulated and so forth flows into your building. Also considered as a flood. Yeah, so the definition of flood doesn't mean heavy rain then only flood. Yeah, the definition of flood here is covering overflowing of your drains. Your drains cannot handle the water. Your public main pipes also burst and so forth. Is also considered as a flood damage. Yeah. So there is an excess also. It's a small excess, 1% of total sum insured and 200 ringgit whichever shall be the less. Yeah, we shall also come back to this particular uh, and cover of flood later on when we talk about how we underwrite the risk, this type of risk. Yeah, we come back to this later in the day. Then we have explosion. Earlier part we mentioned fire. You mentioned the standard basic cover is explosion of gas used for domestic purposes. That's only domestic purposes. But now it can be covering explosion for industries. Yeah, with boilers. Of course, there's different rates between industry with boiler, without boiler, and non-industries with boilers and without boilers. Yeah, this is the not the domestic explosion. It is an explosion relating to industries or in areas where the gas or what is not used for domestic purposes, and this is an explosion. Okay. So it says loss or damage to property insured by fire or otherwise directly caused by explosion. That means the explosion will caused by explosion, then there's a fire due to the explosion, and that will be covered under this extension. It's like I'm sure everybody knows the Putra Heights gas explosion, right? And this is an example of what happens when there's an explosion. Recently, I'm sure you see the news, you see the papers. There's a huge explosion on the gas pipes running around Putra Heights, and there are a lot of damages created by this explosion. All the houses are damaged, some shops are damaged. How many? A few hundred houses were damaged. Yeah, and it excludes exclusion is boilers, economizers, vessels, machinery apparatus which pressure is used, and their contents under these boilers. This is excluded because this element here, boilers, economizers, and other vessels, are actually covered under the engineering policy. We call it boilers policy, machinery background policies are covering all this. Therefore, it is not part of a fire cover, but falls under the engineering section of insurance, which is boilers insurance and so forth. Yeah, that's why it's excluded under the fire. Impact damage. Similarly, like aircraft damage that we explained earlier, this is talking about impact damage where the road vehicle or your way or the vehicle, lorry or what, has actually knocked against a property. You can skid, it can somehow unable to control, lost control, and it just smash into a building. That is impact damage, where the vehicle lost control and smack and hit the property, basically, or damage the property. There's an excess of $50 for this extension. However, you may ask, what happens if my own vehicle smash into my own house? Yeah, the one above just now we explained is talking about other than your own car, your third party car, lorry doesn't belongs to you, uh, damage your building. Now you want to say somehow I want to cover my own vehicle damaging my own building. Yeah, the owner of the factory has lorries. Sometimes during the delivery and things like that, they may accidentally damage the building. Maybe smash into the building because the lorry's brake was not working. So you want to do that, you can. You can still extend, but the excess will be 250 ringgit instead of 50 ringgit. Yeah, that is impact damage on vehicles, third party vehicles or own vehicles. Yeah, you think this would not happen? We have also quite a number of claims that we pay because of impact damage as well. So we shouldn't say that this is very remote. Based on the frequency of claims that we have seen, they are damages due to this. Yeah. Second, number seven, bursting or overflowing of water tank apparatus and pipes. If your building is more than 5 stories, the rate is 0.06. If it's less than 5 stories, it is 0.05. What does it cover? If your water tanks are burst, right, then of course the water will flow downwards, seep into your building or whatever. Then is a loss to the insured. So we will pay for that kind of losses. But it doesn't cover when your premises is unattended. That means nobody stays in the building anymore, right? Then it won't be covered. Obviously, when nobody stays in the building, there's no maintenance and the pipes can deteriorate faster, right? So that's why we don't cover when it's untenanted. If it's certain buildings have sprinklers installed, and any discharge and leaking from sprinklers will not be covered under this extension. However, it can be covered by another extension that we'll go through afterwards. Is sprinkler extension. Con loss, because of the loss, will not be covered. There is excess of $1,000 applicable for this extension. If your sum insured is less than 50,000, then your excess is actually only 1% of sum insured or minimum 100 ringgit. Yeah. So there are two levels of excess. One is sum insured above 50, one is sum insured below 50,000. Okay. Item number 8, bush dalam
Mr.
fire.
Yap, Mr. Yap,
Yes. Yeah.
can I ask? My name is Peng Lai Huat. I asked question on the explosion just now. You were talking about explosion, and
Yes.
you have highlight the incident at this Putra High.
Yeah.
And you have just mentioned about the basic cover.
Yeah.
So, unless it's by domestic explosion, so in that case, the houses there affected are not covered because the proximate cause of the fire was explosion, right?
Yeah.
The Putra Height one. Would their house policy covered if they buy a fire insurance? Of course, if it's householders, explosion is automatically included. What if it's a fire policy? Because we know that the proximate cause of the fire was explosion.
Okay. To answer your question, for my opinion, is an explosion lah. Yeah. But I
Yeah.
think because of the what you call publicity or that has created in this incident, I think some companies will just have to pay lah, because of publicity and things like that lah. Yeah. But then again, as I say, the explosion also causes the fire, right?
Yes, I mean the proximate cause is the explosion, right?
Yeah, yeah.
Putra Height one.
Possibly the exposure, but then again, as I say, because of the publicity, I think most insurance company will just pay for this lah. I think lah, yeah, from what I know lah.
But technically, it's not covered, all right?
Technically, it's an explosion lah. Technically,
Okay.
right? Did I answer your question? It's an
Yeah,
explosion.
yeah. Thank
Obviously
you.
it's an explosion.
Thank you. Yeah.
Okay, where we are we? Bush Lalang fire. Under Bush Lalang fire, rate is 0.05. This is basically fire spreading from a bush which has caught fire or lalang fire. And of course, obviously, this is very remote in Malaysia, unless you are really uh, having a factory and it's quite remote area where a lot of lalang or bush is surrounding the factories lah. Yeah. But in Malaysia, I think this is hardly seen lah, hardly to me it's hardly seen lah. So it's quite remote lah. But in overseas, I'm sure you have heard bushfire in Australia, bushfire is from US, and you can see the amount of damage that a bushfire can create, because those bushes are very dry and can spread very fast with the wind condition in those areas. But in Malaysia, so far we are quite safe in this particular area. So chances are a lot of people won't extend this lah, unless you tell me the factory is very close to a lot of bushes, a lot of lalangs, which unlikely lah. Factories may be in a remote area, could be the palm oil factories, where the palm oil factory is right in the center of a palm oil plantation. You may find that there, but obviously the insurer also will build the factory not surrounded by bushes and lalang. So you ask me, very remote lah, for this to happen in Malaysia. Okay, then the item number 9, electrical installation A and B. Clause A. Clause A rate is new. It is what does it cover actually? What does it cover? What does it not cover in A? It's not covering loss or damage to electrical equipment machinery when it's overrun, when there's too much pressure, when there's short circuiting, there is leakage, arching or leaking of electricity. Those will not be covered if you don't extend this.
Sorry, Mr. Yap.
Yes.
But I think your slide is disappearing. I mean, there's no slide. Yeah.
No slide at all.
Yes.
Okay. Let me redo again.
All right, sure.
Let me reshare again and see what happens.
Okay.
Is it showing up?
Yes, it's showing. Thank you.
Now, next page.
Yes.
Can I?
Yes. Yep.
Okay. We are now at clause A and clause B of electrical installation. As I mentioned just now, if you don't extend, automatically your policy will have electrical installation clause A, which actually excludes the electrical equipment that you have. If there is overrunning, excessive pressure, short circuiting, arching, leakage of electricity, will not be covered. Yeah. This clause A only applies to manufacturing risks and workshop. If you are house, you are office block, if you are a warehouse, it is not applicable. Yeah, it's only applicable for manufacturing and workshops, right? Manufacturing risks and workshops. You have to cover that damage to the electrical equipment due to this overrunning of the machine, or excessive pressure, short circuit, leaking of electricity. Then you got to include clause B, which will then, in a way, buy back this cover at the rate of 0.056 on the machine itself. Yeah. Spontaneous combustion. Just now, an example I gave you was about coal. Coal can combust itself, it's too hot. So if it does happen and you are actually insuring the coal, then you must then extend to this spontaneous combustion, which is a rate of 0.081, right? And this, if you just extend it, the loss from the loss due to spontaneous combustion must have a fire in it. That means when combust, there must be a fire that ignites and damage the stock or whatever that is around the building. if you want to do spontaneous combustion on its own without even having a fire, that means combust, no fire, but your stock, whatever is damaged, then you have to extend it with a rate of 0.161. Yeah, so there are two elements. One is spontaneous combustion must follow by a fire, that is 0.081. You want solely spontaneous combustion damage without fire happening, then it's another rate of 0.161. So depending on which insured wants to buy, yeah. The item 11, damage or falling trees, branches, and objects. This is also quite obvious by the way the title of the extension is actually damage due to falling trees, to your gates, fences, uh, will be covered under this extension. You'll find that in currently in Malaysia, you see a lot of storm, right? Sometimes the rain can be very heavy. Yeah, the trees can fall, right? And if your house is outside your house, just outside your fence, there's a big tree. That tree can fall, damage your house, right? You extend to this, then your policy will cover that damage, which is excess of 250.
Mr. Yap,
Also, yes,
sorry for the interruption, but there is a question in the
yeah,
chat.
yeah.
Will the electrical installation apply to a lift built in a house?
A lift built in a house.
Mm.
Yeah. You should extend to cover electric. Wait. In the house, is it?
Yes, in the question it states
Okay.
in a
House,
house.
no need, because house don't even have this exclusion. As I said, this particular electrical installation A and B is only for manufacturing risk and workshop, not house. House will not have this exclusion. It will be covered. Is it okay? Right. So I hope I answer your question. No need. House is no need because it doesn't apply to house. It's only applied to manufacturing risk and workshop only. Okay, right?
Yes, thank you.
Damage. Okay. We go to the next slide. Storm and tempest. Yeah. Just now it's falling trees. Maybe falling trees because of the storm. Right. Now the next extension is storm and tempest, which is relating to heavy rain, heavy storm, cyclone. Of course, here we don't have hurricane, we don't have cyclone, we don't have typhoon. We're very lucky. We only have windstorm, right? So that windstorm damages the building or whatever injured items, then it is also covered. But there's some exclusions that we need to be aware lah. Yeah. Of course, in excess of $200 or 1% of total sum insured. This is very important because some clients think everything is covered. It's not. Okay, loss of damage by water or rain, unless sustained actual damage to roof or caused by water entering the building through opening of the roof. Means to say there is no damage to the roof after the windstorm, and you still see water seeping through the wall and damage maybe your stock, which is on the floor and things like that. This extension will not cover because your roof was not damaged at all, but water still seeps through the building. This only indirectly only says that your building is the water seeping through the wall is actually due to the wear and tear of the roof, because roof doesn't no damage ma. It's just seeping through the seeping at the side of the wall, coming down, the water seeping and coming down through the floor, right? So there's no damage to the roof. So that means your windstorm doesn't damage anything. It is the water seeping down is most likely due to the cement that you put on the wall, side the wall. Maybe after a while it cracks. Yeah, so water will seep down. So it's considered as a wear and tear kind of loss. So when there would not be covered under such circumstances. Yeah. So we must be sure that the roof must also be damaged. Then there's the consequential loss not covered, hailstorm not covered, because subsidence landslide is not covered under storm, it's covered under the other extension, subsidence landslide extension. Your awnings, your blinds, your outward features, fittings that's outside the building will not be covered under the storm, right? And if your premises is under the cost of construction and repair, it's not covered. Okay, we move to the next one, which is right strike and malicious damage. Also quite obvious what it means, but we need to know what do you define as a right strike and what is malicious damage. Yeah, right strike means any person taking part together with others in in any disturbances of public peace, not being war, mutiny, terrorism, and strike. That means it's relating to war, mutiny, terrorism is definitely not under right strike. Right? Of course, how do you know whether it's war or mutiny? Of course, government declare it's war, mutiny, or terrorism. The government will actually declare such things. Yeah. If one person does this act, then it's not considered right. It must be one or more person. Oh, sorry, it must be more than one person. Then you consider it as a strike. Or it can also mean willful act or any striker or lockout workers done in furtherance of a strike or in resistance or lockout. That means to say, let's say a group of workers not happy with the management of the factory, they do a strike in the factory compound, they damage the factory building and so forth. That is part of a strike, a riot or strike. But this one is confined to the particular factory. So it is still considered as a riot and strike damage. The third part is if there's a riot, the authority will send army, police to control. But in the wake of controlling or attempting to control this action, they may have damaged certain parts of a property. That kind of damage will still be considered as a right strike damage. So it's also covered under this definition. Then you cover malicious damage. Malicious damage is any malicious act by any person will be considered as a damage, and policy will also pay. Example, if some people come in, go and throw something to your building, damage your roof, that is a malicious damage loss. Exclusion, it doesn't cover theft, it doesn't cover burglary, it doesn't cover housebreaking. Yeah, that one you can cover under your burglary policy, not under the fire policy. Cold storage, A and B. Similar to electric installation A and B, Clause A will not cover it. Clause B is a buyback to cover damages if the temperature in your cold room changes, right? That means some damages happens to the cold room, therefore your temperature doesn't work and the contents in the building, the contents in the cold storage is deteriorated and damaged. Hence, this extension will cover those kind of damage. Yeah, when your cold storage is damaged and temperature doesn't work, the temperature gauge doesn't work. No more cold, no cold. It's all getting hotter and hotter. Everything melts. So that kind of losses is covered under this extension. Of course, this obviously is only applicable to those insured who have cold storage. Yeah.
Sorry, Mr. Yap, there's a question in the
Yeah.
chat.
Yeah.
If heavy rain and strong winds cause nearby trees to fall and damage the house, is it a claim under storm and tempest or damaged by falling trees?
Is damaged by falling trees. because the damage is caused by the tree, right? It's not storm. Storm is talk about uh, blowing off the rooftop, not the tree didn't fell to the rooftop. Is the wind, strong wind blows the rooftop away, water damage comes in, and then it stops. When the storm damage the tree falls on the roof, it is not storm, it is falling trees. Yeah? Okay?
All right, thank you.
Then you have smoke damage. This is only applicable when the factory maybe uses smoke to dry certain things and so forth. Right? So anything due to this will also be covered if you do extension for this. Yeah. But of course, this is only restricted to only factories that uses smoke to dry certain things. Yeah. Similarly, goods and stocks undergoing any dry heating and drying process is like timber. I think timber, you need to go through a heating process to dry the timber and so forth. If you extend to this, then damages occasioned by undergoing such heating and drying process will be covered under this extension. Because this is only applicable to those having this kind of process. Yeah.
Another question, Mr. Yap.
Yeah.
If there is fire and damage, the food in the fridge, does it cover
Fire and
damage?
okay. If it's a normal fire where the cold storage is not that means what I'm trying to say is if the loss is due to the fire, obviously the normal standard fire policy will cover it. Now that extension is meant to say something wrong with the cold storage temperature, not because of the fire, something else, right? Maybe there's a damage to the temperature gauge of the cold storage. You extend that will cover because there's no fire. Is that clear?
All right, thank you.
Okay, we have the last one before we go for a break, right? Break is 10 minutes lah, right? Before we move to the next section. This is sprinkler leakage. Just now I mentioned about what extension water damage, right? Yeah, okay, here. Here is already excluded. Water discharge leaking from sprinklers. You want to cover this, then you have to extend to cover this here. Sprinkler leakage, that means if there's accidental damage to the sprinkler. That means if somebody accidentally damaged the sprinkler head, maybe you're driving a forklift when trying to carry a goods, when the forklift lift up your stock, trying to put it into the shelf, suddenly the box is too high and damages the sprinkler head, and it triggers the sprinkler to activate around the building, and water comes down, damages all the stock. If you extend this, then that kind of damage will be covered. If you don't, uh, those water damage is not part of the fire policy cover. Yeah. Of course, this is only applicable when you're building a sprinkler lah. Otherwise, not necessary to extend. Yeah. It has two parts here. One part is damage to the building, which is a rate of 0.05. You want to cover due to damage to sprinkler system, extended damage to sprinkler system. You want to cover the contents, then you have to pay another additional premium of 0.025. There are a few exclusions. Explosion not in this, doesn't cover this. Authority asks to vacate because you are in a illegal land. Damages due to sprinklers not covered. Heat caused by fire, obviously heat caused by fire is not covered under here because it will also already be covered under the standard cover because it's due to fire. you're doing retail repairs, alterations to the building, it won't be covered unless you inform the insurance company. Then the insurance company will say, okay, I noted there will be repairs going on. Okay, we will take that risk. We will still cover you unless you inform the insurance company and insurance company agree that we agree to continue the cover. Yeah, otherwise you just go in and do a repair alteration, anything due to this will not be covered. Even if you inform insurance company, is also entirely up to the insurance company to decide whether you want to continue to cover during your repairs work. Yeah. When your automatic sprinkler installation being either repaired, removed, or extended, when you're doing repairs to the system, anything water discharge will not be covered. By right, you do repairs, remove, extended, all the sprinklers should be switched off. Yeah. Okay. However, this exclusion D and E can also be buyback, right? With another additional premium of 10% of the sprinkler leakage rate. If you want to do this and you inform the insurance company that I'm doing repairs or I'm doing alterations to the building, I'm doing repair for the sprinkler, right? I want to cover it. Can. Insurance company may agree, but you have to pay for 10%, additional 10% of this race. Yeah. If you're more than 30 days unoccupied, definitely you need to inform the insurance company, and the insurance company will then decide whether to allow this cover to be continued. Yeah, okay. We will go to the next part after the 10 minutes break. Let's come back at now it's 10:25. Come back at 10:40. Is that okay?
Sure, sure.
10:40. We start again.
All right.
Let's look at what is meant by a condition, right? The policy condition. What does the condition place? What does it do to be part of the policy? Yeah. The first part is a condition is a provision inserted in the policy that qualify or place limitation on insurance promise to pay or perform. That means to say the condition, the insurance company will have some limitations or qualification of what they will do in order to pay the claim. Yeah. It also require the insurer to comply with certain requirements to obtain coverage under the policy. That means to say, condition will require insured to do certain things, do a requirement. Example is after a claim, what do they want to do? What does the insurer needs to do and things like that. So these are the things that is set in the policy. Yeah. To make it clearer, it also identifies the general requirements of the insured and the insured to matters such as other insurance. You look at when we later on we go through the conditions one at a time, you'll find you need to inform insurance companies what other insurance policies you have. Insurance companies, what are the subrogation rights of the insurance company, cancellation requirement, cancellation notice. After the loss, what do the insurer needs to do? Protect the property after the loss. Then if there's a loss, the insurance company will require the insured to cooperate with the insurance company for investigation or defense of a liability lawsuit. If areas that are not covered, it will specify in the conditions that this is not covered, that is not covered unless it's being extended under the additional covers that we just went through just now. And the condition must actually be fulfilled by the policyholder. If they are not met, insurance can actually deny the claim. So it's very important that whatever stated in the condition that requires the insured to perform, they have to ensure that they did it, they will do it. and it applies at the time of taking the policy. The condition will continue throughout the period of the policy until the settlement of the claim. Yeah. So, condition again, just to conclude, the provisions that requires the insured and the insurer to perform before or after a claim. Yeah, basically is that. Yeah. In the policy, fire policy, it has 25 conditions. Condition 1 is talking about misrepresentation, misdescription, non-disclosure of material facts, uh, which may render the policy void. In other words, the insured must not misrepresent certain statements to us. Cannot misdescribe certain items to us. Maybe they have certain things that they didn't tell us, which is important for us to decide whether to accept the risk or not. This is called misrepresent what you say, misdescribe what the insurer say, and they didn't disclose any material facts that is important to the insurance company. Okay? Condition number 2 is to say, to show proof that the policy has been paid. Yeah? Either to pay to us or pay to the appointed agent. Condition 3 is to say that you have any other policies, please also declare to the insurance company. Right? Condition 4 is to say if the building has fallen, then the policy will be automatic cancelled in the event that automatic cancelled in the event that collapse the building or important part of the building which increase the risk. That means to say if the building is fallen, the policy will cancel. Of course, where has been fallen is already covered under the policy, fine. But they must do protection to make sure the other parts of the policies, other parts of the building are being protected. In other words, it actually protects the insurance company for any liability which becomes neglected and damaged without the insurance. That means once it's fallen, once the building has damage, you will have to make sure again to protect it so that insurance companies will not be covering a neglected building anymore. Then, of course, the last part we are saying, if the fall, we already covered it, then obviously we are continuing to cover that particular damage, which is part of the cover. That's why it says cover granted if such fall or displacement cause a fire and other insured by damage. Cover will already be granted for you for those who have already fallen, or is damaged or fallen. Condition 5 is actually a exclusion. It doesn't cover loss of dam theft during or after the occurrence of fire. If after the fire any loss will not be covered, because after the fire there's no protection, anybody can goes in and take away items, so it's not covered under the policy. Then it also doesn't cover fermentation, natural heating, spontaneous combustion, and while going under heating or drying process. This is exclusion, but of course earlier when we show you the additional cover that we have, this certain parts of it can be buyback, like spontaneous combustion can be buyback, goods undergoing heating and drying process can be buyback. But if you don't, then it is already an exclusion stated in the policy. And then you have damage, loss because of authority. Authority burns the building because you're on illegal land. Subterranean fire is not covered. Nuclear weapon, radio contamination not covered. Yeah. Condition 6 also is not is an exclusion. Earthquake, volcanic eruption, commotion of nature not covered. Hurricane, typhoon, whatever not covered. War risk, mutiny, riot, military unpopular uprising, terrorism not covered. However, you'll find that this can be buyback as already again elaborated just now on the additional cover. Earthquake, volcanic eruption, commotion nature like your storm tempests, all these can be buyback by extending the cover. Typhoon, hurricane, all this can also be buyback under the storm tempest. The only thing you cannot buy back is war risk, mutiny, riot, military, and popular uprising. This one, 100% you cannot buy back. Terrorism, you can still buy a terrorism policy. Some insurance companies can still offer terrorism cover, but definitely no war risk, no mutiny, no riot, military, or popular uprising is not covered. No buyback and definitely not covered. Condition 7 is contamination. Anything due to contamination is not covered. However, if the contamination is actually caused by the fire, which is covered under the policy, then that contamination and pollution is covered. If it's pollution contamination on its own, obviously it's an exclusion. Condition 8 is items not covered, but you want to cover it, you can. You got to insure it separately. Example, goods held in trust and on commission is not covered unless you explicitly include it. And some of the times when you want to cover an item, if you just put, let's say, stock in trade. Stock in trade means you're only covering your insured stock only. But sometimes some of the stock you may be renting something, the stock may not belong to you. You may have a subsidiary company that also puts your stock of the subsidiary company stock into your premises. That can happen. So if you just put stock in trade, that means you're only covering your stock. The stock that your maybe subsidiary company places into your factory or warehouse will not be covered if you don't include goods held in trust or on commission. Yeah. So that's what it means. If you be careful to spell it carefully when you want to insure an item. Goods held in trust or commission, including stock on its own, on stock, insures own stock. So you have to be very careful. You miss that word out, then anything goods held in trust will not be covered. Yeah. So because it's excluded, specifically mentioned as exclusion under condition 8. Then you have bullion, your gold bar, your whatever jewelry, precious stones. It's not covered unless you want to insure it as a separate item. Your creative work of art, maybe your painting, your what you call antique items, you want to cover it, will not be covered unless you want to insure it as an item. Same thing, manuscript plans not covered. You want securities, obligations, documents, stamps will not be covered unless you specifically incurred. Of course, securities, security stamps, all this can be covered under your money policy if you want to cover it. Coal against spontaneous combustion unless you want to cover it as a separate item. Explosive also definitely cannot cover. Boilers explosion other than domestic boiler, you want to cover it, you cover it, as I said, mentioned earlier, under the engineering side of the policy, not under the fire policy. Clear a land, fire, all this is not covered. That means you want to clear a land as a fire, it's not covered under this. Yeah. But if you're clearing a land, the fire spreads to your house, then it's different. Then you have to extend to bush dalang fire. Condition number 9 is any changes to your occupation, you must inform the insurance company, otherwise your cover will also be void. Example, you change your trade, manufacturing. Your factory has changed from a warehouse to doing something. Let's say originally it's a warehouse, but certain part of the warehouse, suddenly halfway you do something else. You maybe want to manufacturing something else, whether it's big scale or small scale, you must still inform the insurance company. Otherwise, your policy, when there's a claim, you have difficulty in claiming, put it that way, if you don't inform insurance company. Nature of the occupation or building has changed. Just now the example, yes, you see a warehouse, but at the sideline, you also do something else. Nature of the occupation is changed. Other circumstances increase the risk. Other circumstances increase the risk could be you may have now put stock of hazardous goods inside your building. Last time you don't have, now you have. So that kind of situation has increased the risk. Therefore, this must be informed to the insurance company. Condition 10, anything relating to marine is not covered because it is supposed to be covered under the marine policy. Okay. Condition 11, cancellation of insurance. This is cancellation. If the insured wants to cancel, there's a short period rate to apply. If cancelled by insurer, it's 14 days notice by registered letter. Yeah. Of course, if cancelled by insurer, it will be a pro rata refund. Cancelled by insured is a short period refund. Condition 12 is talking about claims. You have to notify claims immediately or at least 15 days after the loss. You must inform insurance company all the particulars of the things that has been lost, and all the terms conditions must comply. Yeah. Condition 13. This is the additional item that is covered, which is saying that you are also covering the wages, employees, full-time members of fire brigade, cost to replace firefighting expenses, damage to materials, including employees' clothing and personal effects, also will be covered under here, provided all these are relating to trying to extinguish the fire. Right? You need to pay wage. Need to pay overtime to your staff, your employees to help to dose the fire. Then all this overtime pay can be payable under this particular conditions 13. Condition 14 is just to say, after the loss, insurers has the right to enter the building and keep possession of the building for basically investigation. Yeah. Condition 15 is to say, if it is a fraudulent claim, obviously policy will be forfeited or not payable. Condition 16 is to have the option of the insurer to either reinstate the property or replace the property, or we pay cash. Right? So reinstate could be paying cash, could be also help to what you call pay for the construction cost to rebuild back the factory, or if it's a machine, we have the right to also replace the machine and buy a new machine and replace it for you. Reinstate, we pay cash for you to reinstate. So it's the option of the insurer to decide which option do they want to rebuild or pay back what has been lost to the insured. Okay, condition 17 is insurance pays market value, whichever is lower. Okay, if it's market value, we pay the market value. If the market value is 100%, if the market value is higher than the insured value, the maximum the insurance pay will only be the insured value, which is the sum insured. Yeah. 18 is talking about subrogation. We have the insurance have the right to recover the losses from the party that actually causes the loss, right? That means we take over the rights to claim back from the party who has actually caused the loss, right? After paying our insured. So once we pay the insured, is the insurance right to now recover from any party that we think has causes the loss. Like for example, because Putra Heights is a good example now, because the cause could be due to I'm just saying maybe it's not true, it's true, we don't know that has been proved, that has not been proven, we don't know the cause yet. What I'm saying is that once we pay the damages to our insured, then insurance will have the right to now say, I now want to subrogate the loss from Petronas, because they could be the one that causes damage. Maybe it's due to a negligence of not maintaining the pipe or whatever. We don't know yet. is actually under investigation. So insurance company has the right to then recover from Petronas. Whether it's successful or not, all depends on the investigation. Yeah. Condition 19, contribution applies if there's another policy. That means if there's another policy that's covering the same item, then we can contribute our loss to this company. Let's say if insurer A is also covering the same item and also insured for 50% of the loss, so we can claim back 50% from them. Condition 20 is the average condition. I'm sure by now most of agents will know what this average here means. Average means is insured is added under insurance. How does it work? In other words, insured is now self-insuring on the part that is underinsured. Example, if the sum insured is 1 million, loss is 300,000. The market value or the reasonable value of that particular item is 1.2 million. Hence, insurers will only pay 250 using this formula, the one that you see in the screen. Insurer will now have to self-insure 50,000. Yeah, that means they are underinsured by 50,000 as far as the 300,000 loss is concerned. So we only pay 250 instead of 300. The 50,000 that is underinsured will be borne by the insured itself, underinsured. On the other hand, if it's partial loss, of course, the formula that I used just now is apply. If the total loss, we will just pay the maximum sum insured because you're already underinsured by 200,000. If total loss 1.2 million is lost, we only pay you the 1 million. You already suffer your 200,000 because you're underinsured. So if it's total loss, we pay the sum insured amount if it's underinsured. Condition 21 is a reinstatement of loss, meaning to say, after a loss, the sum insured actually automatically reduce. Example, let's say it's 5 million sum insured. There's a loss of 1 million. How much do you have left as a sum insured? You actually only have 4 million left because 5 million minus 1 million that you have claimed back from insurance company, you only left 4 million. So by right, your policy sum insured is only 4 million. Yeah. But with this condition 21, it says it automatically reinstates back you to 5 million. Right? That means your sum insured still remains at 5 million. And for that additional 1 million, you will still have to pay for the additional premium. Why is this so different? In any other policies that you see, let's say if it's the burglary policy that you have, if your loss, you lose out, let's say your burglary is 1 million or so, let's say, and your burglary loss is 500,000. So by right, your policy has only 500,000 left, just like a fire policy. But in the burglary policy, you don't have this condition, automatic reinstatement back to 1 million. Your insured himself will have to then say, I want to reinstate back to 1 million. Insured has to initiate it, okay, if it's a burglary section, because they don't have this condition. In the fire condition, it's different because you have this automatic reinstatement. That means whatever is it, we will still go pay you. Your sum insured will still remain at 5 million even after we pay the loss. So that's the difference between the fire maybe with any other policies where there's no reinstatement of loss clause, right? Not to say no reinstatement of loss, not stated in the policy, right? Condition 22 is arbitration. Is basically saying if both doesn't agree to what insurance company has offered to pay back, then instead of going to the court, we may have arbitration to decide what should be the real actual amount to be payable. Condition 23 is time bar. If you have a loss and you don't inform us within 12 months from the loss date, then this particular loss will not be payable if there is no notification after 12 months. Basically, it's no notification of loss after 12 months, this particular loss will not be payable anymore. Of course, if you have notified us, but still pending because of whatever reason, maybe documentation, still trying to do investigation, you already inform us, and even after 12 months, there's no payment now, is not part of this condition, yeah. This condition only saying there's no notification at all, and if the no notification at all exceeded the 12 months period, then if you then only notify insurance company on the 30th month or 13th month, then the policy will not pay because it's already exceeded the time. Condition 24, anything that you want insurance company to do or inform insurance company, it should be communicated with writing or printed. Maybe an email is considered writing, a phone call with no documentation is not considered a communication because there's no proof to say you're a communicator. In other words, no proof to say you're a communicator. It's just a telephone call. Anything can be said in a telephone call, right? So it has to be in a written form. Especially, example, a very good example is every time uh, somebody wants to renew the policy, they just give a telephone call. Please renew my policy, whatever. Okay, no black and white. Then somebody has forgotten, for example, to go and renew. Just a phone call, think everything will be in order, no black and white. So there's a claim. Where's the proof that you asked us to renew? No proof, no written confirmation. That becomes a challenge when there's a claim because policy not renewed, no written confirmation, it's all verbal. How to prove verbal? So that will becomes a challenge. So it's always good to put in a written confirmation. Somewhere email to say I want to renew my policy and so forth. So always good to have writing. Yeah. Condition 25. Remember just now earlier we mentioned schedule, declaration, earlier part, and policy. This is the policy. What I'm going through is the policy conditions, policy coverage is in one policy. But what are we covering? Who is the insured? What is the sum insured? All is stated in the schedule as I explained earlier, the declaration, the insured name, the company, period of insurance, what is covered, what extension. These two are read together as one particular contract. The schedule, declaration that we mentioned, plus this policy wording is read together as one contract. That means together, they are together. It's not a separate, it's together. Okay, any questions on conditions? Policy conditions? No questions? We move to the next part, which is talking. Yeah, so it all depends on what the insured is actually doing.
Sorry, Mr. Yap, your
Yeah.
slide is disappearing
Off again.
Yeah.
Okay, let me share again.
All right, sure.
Can you see again?
Yes, yes.
Go back to conditions. We are here. Right? Can see, yeah?
Yes, can see.
Okay. We now move to endorsement warranties and clauses. What is the difference? You may want to ask now, okay, what's the difference between a clause, endorsement, and a warranty? Why? What's the difference? Okay. The difference is when it's a clause, when it's endorsement, it's actually a written provision that add to, delete, modify, clarify the provisions that is stated in the policy wording, right? For example, when you say provisions that add to, that means a clause that will extend the cover. Like just now, talking about all the areas, isn't it? Those are clauses that extend the cover. So it's add to the cover. Also, it deletes the exclusion, like what we say in the policy wording itself. There are certain exclusions.
Sorry, Mr. I think you need to reshare.
You cannot see again, is it? Can you see?
It's not enlarged.
No. Yeah. Wait, I heard that it's not sharing again, is it? Okay, can you see it now?
Yes, yes, can see.
Okay, so we proceed again. What's the difference between clause and warranty? Sorry for all the interruption. Somehow the sharing is not working very well today. Anyway, okay, we continue. The clause is to add, delete, modify, clarify provisions in the original insurance contract, right? Add means add coverages, like what we do in the additional cover, additional perils like right strike, flood, things like that. You add to the cover. You delete an exclusion. Like just now in the policy condition, you have exclusions like earthquake is excluded. What else is excluded? Your storm temperature is excluded, and so forth. Now it says delete, but in these circumstances, you want to delete something that is covered. Example, say you want to delete a cover. Let's say you want to cover what you call explosion, domestic explosion. So you now put in a clause to say this policy exclude the cover of domestic explosion. As an example, so it's what you call delete an exclusion. Add a clause to delete what is already covered in the policy. Or we don't want to cover certain items, So this policy is excluding the cover of certain items, So it's also an deletion of a cover. Modifies, maybe you want to change a policy condition, limit the cover. Example, maybe a policy condition is to say subrogation. There's a condition of subrogation, isn't it? You want to say waive the condition, you put in a clause to say waive subrogation. That means the insurance company has no right to subrogate, right? From anybody. Also can modify. You call it modify. Clarify. That means to make the certain part of the policy very clear. So you put in a statement to clarify the statement, So this is a clause or an endorsement. Compared to a warranty. Warranty is a pre-contractual promise that you give to your insurer in order for your insurance policy to remain valid. That means it's a promise that you have to make to the insurance company that you will do. Example, I warrant that you must have let's say security guard, 24-hour security guard, in the premises. That means you will promise that you must engage 24 hours guards. There's a warranty. And what does it do? It will actually compel the insured to practice and implement this kind of condition. If you did not fulfill that condition stated in the warranty, then it's a breach of warranty, which gives the right for the insurance company to repeat the claim. Example, just now, I warranted that you must 24 hours guard. then it's found that after the claim, you didn't engage any guard, right? Hence, your warranty is breached. Therefore, the insurer has the right to repudiate the claim because you did not fulfill the promise, a pre-contractual promise of having 24 hours guards, right? So that's a warranty. Yeah. Oh, okay. So I hope this explains to you difference between clause and the warranty. Clause is add on, delete, modify, clarify. Warranty is something that is a pre-contractual promise that the insured must do in order to fulfill the condition where insurance company will pay. Right? Just like the example I give you, warranted that you must do something. Okay. In the fire policy, there are certain warranties that automatically apply to the insured, depending on the type of occupation. Yeah. And I think what I selected here is those important warranties that you should be aware of, and what you need to do to avoid breach of these warranties. Yeah. The first warranty that we want to look at is storage of hazardous goods warranty 3A. Automatically, some occupations which I listed in the middle column, 108, 108 flat, 102 general merchandise, 106, 114, 3402, 3412. These are the occupations that warranty 3A storage hazardous goods will be included into the policy automatically, right? Means, let's say, take an example, general merchandise, shop. You're doing a trading. You may have only very limited hazardous goods items inside. So, okay, fulfill your 3A. But your general merchandise has a lot of hazardous goods, like you sell a lot of kerosene, more than this 3006 liters. You do a lot of LPG gas, right? 30 kg or 4 cases. So you are breaching this warranty. You have more than this element stored in your shop. What do? You have to extend to warranty 3B, which allows any amount of such storage, but of course, additional premium pay 25% of loading. Yeah, give an example, a warehouse, store no hazardous goods, hence your warehouse will be 3402 lah, general storage, under general storage. So automatically the policy will have warranty 3A applied into the policy. But if you are storing hazardous goods, then you will have to then take up 3B, warranty 3B. So please bear in mind, because sometimes insured may not be aware of this, what kind of goods they store. So as an agent, it's good to explain to the agent that to know what kind of goods they store and things like that, to make sure you comply to warranty 3A.
Mr. Yap, there is a question in the chat box.
Yeah.
How if the fire happened when the security guard on MC?
It will still be triggered. It will still trigger a breach in the warranty, because the warranty says you must have guards 24 hours. You're the MC, meaning to say you must then make sure the security guard that you employ has to find a replacement. Yeah. Because warranty is a warranty, it's stated warranty. So you must have.
Another question.
Yeah.
Do you have any standard description for us to write in the proposal form for commercial fire policy, whether contents or buildings, so we will not miss out when come to the claim?
It's very difficult to have a general thing, because it all depends on what your insurance wants to cover, right? If you say you want to have a general item, you can say your current plant and equipment, all plants and don't you put all plants and equipment, all description, plants and equipment, all description, right? You put stock, stock is definitely very obvious. Stock is for the insured, any stock is insured. You want to cover work in progress, then you put it lah. Stock including work in progress belonging to the insured or held in trust. You want to make sure anything held in trust you're covered. You can always say stock held in trust or commission, or stock in trade including all goods held in trust or commission also can. So to give you a very standard one is not easy lah, but general term is that you put all description lah, like including stock held in trust, all plant and equipment belonging to the insured, right? Things like that lah, you know. I hope I understand. I have given some tips to what you want to say, what you want to put in the policy lah. If you want to insure building, you want to cover everything in building, you can put on building, including features, furnitures, and fittings.
Hello, Mr. Yap.
Yeah.
This one, the warranty number 3, LPG, 30
Yeah.
kg. If a sundry shop, how?
Depending on how much they store lah. It cannot be more
What's the
more
limit?
than 30 kg lah.
Oh, more than 30 kg. lah.
One
If-
one normal domestic tank is what? 1 kg, is it? If you're not mistaken.
If more than 30 kg?
No. Added together is not one. Added together. Let's say the sundry shop, they don't sell big tanks ma. They only sell the domestic 1 kg tank. I think 1 kg or 1.5 kg. I'm not very sure. It cannot be one tank 30 kg. So you put there, say it's 1 kg lah, for example. So you have more than 30 tanks in the store, then you have to put 3B already lah. You have to restrict it to 30 tanks only lah.
Okay.
Yeah, you understand? I'm sure sundry
yeah.
shop won't keep 30 tanks lah. I think they may keep maybe less than 10, you know. If they know, then they order. No, then they order lah. I don't think they keep so many. If I'm not mistaken lah, I don't think they keep 30 lah. If one tank is 1 kg lah.
Yeah. Okay, thank you.
Okay, any questions? I hope the description of the items insured is clear enough. Stock, you can put stock in trade, including goods held in trust and commission. You want to cover plant and machinery, you can say all plant and machinery of all description. Then you cover all your plants and equipment. You want to cover building, you want to cover your furniture and fittings, then you say on building, including furniture and fittings. You know, does that help? The agent that asked the question, does that help you?
Yes, they answer in the chat box.
Okay. So we move on. The next warranty, restriction merchandise. That means to say no manufacturing, no deposit or storage of merchandise. This is automatically applied to dwelling. If you do 101, your insured is 101 dwellings, maybe apartments, maybe condo, or maybe even sometimes you don't buy a house owner, you just buy a fire policy lah. Yeah. So you will have to make sure that there's no process, no storage in the house. I can give you an example. You will know that certain people do a lot of direct selling, right? So their house sometimes may store some stocks. Put some stocks inside. Small amount, okay lah. People would, I don't think insurance company would mind lah. But you store a large amount of stock inside, and there's a fire in the house, and we find that there's a lot of stock inside the house, then you are breaching that warranty number 1, right? Which then insurance company has the right not to pay you lah, because you're breaching the warranty. And to avoid this, you then have to change your occupation from dwelling to a storage, because you have to pay more for it lah, you know. dwelling rate and general storage is definitely different. Yeah, so have to be aware of that. So don't think I'm a dwelling house and you store goods inside a dwelling house. It's okay lah. Never mind. I just buy a dwelling lah, or buy a householder policy lah. So it's not going to work. Okay, you have a challenge when there's a claim. Vacant risk. If the risk is vacant, the warranty 12 will automatically apply, and it means no storage or deposit of goods in the premises. Yeah, because it's vacant, the word already say vacant. Vacancy means nothing inside, right? Nothing inside. I give an example. The premises is unoccupied, but the guy still leaves the machineries that is not used, still left there in the premises, as a store. It's a store for all the old machines that not used. Leave it there lah. I don't want to take it away first. I leave it there. Then there is a breach in this particular occupation 1422, unoccupied or vacant risk. Remember, vacant risk, nothing inside. Nothing inside. That's why the warranty says no storage, no deposit of goods must inside, and the premises must be secure. So what do? You are still storing the machines inside. Then you have to buy either you remove the machines or you put it under silent industry risk 1420 or general storage. Right? So vacant risk rate is always lower than your 142 or 3420 rate lah. So has to be a little bit mindful of this kind of warranties lah. Yeah, when you want to insure these kind of things. Printing process means Bill 4C means no printing. And this applies to all plastic risks under that category. You can see that 2401, 2502, 2504, 2506, and so forth. Printing, there are manufacturers of maybe process printing. You do a plastic, but you also want to do some printing to save cost. Maybe when a small section of the factory, you do some printing. If you do that, then you will breach your warranty 4C, because warranty 4C will be automatically applied to those trade codes that I mentioned, 2501, 2502, 2502, all plastic risks. Therefore, you have to extend to cover printing, right? If your insurance has printing in the premises. So you need to know what the insurance actually do in the process, in their manufacturing process, to make sure they don't breach any of the warranty. Yeah. The next one is silent risk. Silent means silent. Nothing is done inside. That's why it calls silent risk. So warranty 27 will apply. Machines must not be operation except for the purpose of keeping or order occasionally without any materials. That means do some maintenance without producing anything. Yeah, and no storage. That is warranty 27. So it's applicable to silent industrial risk. Okay, example. Silent, you can keep the machines inside, no problem. Unlike the vacant risk, you cannot keep. Vacant means vacant. Silent means machines may still be there, but it's not operating. The factory is not operating. You have few machines inside, but you still keep stock inside, unsold stock inside the premises. The warranty say no storage of stocks. So there's a breach of warranty again. Therefore, when there's a claim, it will be a challenge again. Right? So to do this, you must make sure you have still stock left over inside and not removed. Then you have to put it as a general storage, not silent industrial risk. Right? Then you have warranty 4B, spray painting and powder spray painting. Again, some manufacturing, maybe a workshop, also do some spray painting or maybe powder spray painting. Similar, also plastic manufacturing, an example that I've given you. Again, they do some spray painting of the finished plastic, right? And they didn't inform insurance company. So 4B will be applicable to this occupation. Again, you will breach your warranty again. If you do know that they do spray painting, then you can extend spray painting for 24A, which is here, is a 15% loading on the basic rate. But if you buy back with this warranty, there's conditions that you must fulfill. One of them is it must be carried out in the open, or maybe a separate building on its own to do this spray painting. And the storage of this spray paints must be in bricks or in cement or concrete built compartment. They must be stored in the compartment. And lighting must not be using artificial lighting, must be normal sunlight, things like that. Okay. These provisions that I mentioned may be difficult for the insured to fulfill. If you can't fulfill it, then you have to move to Warranty 24B, which has no provisions. That means just do spray painting. I allow you to do spray painting. Of course, your loading is 35% instead of 15%. Yeah. If you do powder spraying, it's the same thing. Just that a different warranty is 25A and 25B. The concept is the same. Yeah. The reason I highlight these few warranties because we have seen many occasions where this has been overlooked, and once it's overlooked, it is a challenge when there's a claim. Yeah, so that's why I highlight these few warranties, just to make sure that the agents are aware of such warranties that's applied and what do they need to do if they find that the insured is going to breach that warranty. Yeah, okay. Okay, now we move to clauses and endorsements, which is a lot. Okay, I divided the clauses and endorsement into 4 sections, 4 categories. I don't know 4 sections, 4 categories. The first categories of clauses and endorsement is when premium will be charged if you include this warranty upon inclusion. That means you want to include this, there will be a additional premium charge. That's the first column. The second column is the premium will be charged only when you declare. That means you include the warranty, you include the endorsement inside, not warranty, endorsement inside. At the end of the policy expiry, you have to declare actual. Once you declare actual, we will then charge, the insurance company will then charge you. That's what I call premium charge upon when you declare at the end of the policy. The third column is where these are all given free of charge. No need to charge. We just apply the warranty. You apply the endorsement of warranty. And the last column is for clarity. Right? That means is to make sure there's clarity of what the policy wording is all about, to ensure understanding of the policy wording is much clearer, or given to you that certain things like foundation, what do you do in the foundation of the building, what is covered under the foundation, what do you do when there's co-insurance, what do you do when there's a leasing involved, what do you do in certain circumstances where it's being unique for a particular insured, right? Not applicable to all, but unique for certain particular insured. Then what do you have to do? So this is more on clarification of what you need to do. Okay, so we first move to the first part, which is premium charge upon inclusion. Yeah, that means you need to pay a premium for us to include this. The first one is removal of debris with separate sum insured. That means I want to also cover the cost involved to remove the debris after the loss. Right, with the sum insured, you can say remove debris, I want to insure for 2 million, 1 million, whatever. So that 1 million sum insured will have to be charged based on the whatever rating for the fire policy. Likewise, architects, second one, architects, surveyors, consultants fees is the same as removal deliveries. It's just that after the loss, the insured may need to engage accountant or surveyors, architects, surveyor or consultant fees to rebuild the factory. So they may need to incur a fee to try and reinstate back the property, right? Pay the fee. So you want to cover it, you can. And you can say, I want to cover 1 million for this kind of fees that I may need to pay. So a rate will be charged. The normal the fire rate that is applicable to the policy will also be charged for this 1 million that you want to insure. Escalation clause. Escalation clause. Escalation clause means your sum insured may escalate throughout the policy period. Means your sum insured may increase. Now you might need to insure 1 million, for example, but throughout the policy period, your 1 million may not remain at 1 million. Your cost of the item may increase throughout the policy period because of inflation, because of the items that you insure may go up in price, things like that. So you put in an escalation clause. Means to say your sum insured will increase ultimately by 10% for the entire period. Right? Say you insure 1 million, you put in an escalation clause of 10% means your sum insured now becomes 1.1 million instead of 1 million. Right? How it works, it actually increased by day. I give you an example. Let's say your sum insured is 2 million, your rate is 30 cents. So your goods will be increased by $547 every day, because 10% of your 2 million is 200,000. So your 200,000 divided by 365 days is actually equals to $447.95 a day. Means say every day your sum insured of 1 million will increase by 547.95 every day until it reaches additional 200,000 at the end of the policy period. If it's 1 month, your sum insured becomes 1 million plus 547 days per day times the 30 days. So you will be the insuring amount is actually that 1 million plus the number of days you are on the increase. You have to pay additional premium of the rate is 30 cents. Your 200,000 extra, you pay 50% of it. That means in the example, you see 30 cents times 200,000, which is your 10% increase, and that premium is 50%, which is $200. That means you pay additional premium of $300 if you want to include escalation clause. Okay? Smoke damage endorsement. You already explained just now. One of the extensions that you can have is smoke damage, and it costs 10% of basic rate, and it's 50,000. It is damage due to smoke because there's a faulty operation in your heating or cooking unit that generates the smoke. Yeah, if the machine is faulty, if your equipment is faulty, unable to generate smoke, damages your goods, then it is covered under this extension. Same thing, I already explained under item E, goods and stock undergoing a heating or drying process. I explained is one of the extensions that you can have. The premium is 0.01 or 10% of the basic rate. Yeah. Of course, this kind of rating you may not get a full picture how it's calculated, of course, when you want to extend, you can always get our marketing people to go and quote for you. Yeah. But the basis of rating is what I just said, 0.01 times 10% of basic rate. Then again, we have talked about this before, sprinkler leakage endorsement earlier. Accidental discharge of sprinkler, you can also include. Rate is 0.05 on building, 0.25 on content. We already explained it just now. Then you have another kind of endorsement that you need to charge is floating insurance. Okay, what does that mean? You see, there are certain people where their stock moves around in certain locations, especially when they have a lot of marketing office. The stock may be in office A in KL, Kuala Lumpur. The next day, if Penang office says not enough, they may then send their goods immediately up to Penang because there are customers there, So there are these stocks are floating. That's why I say floating insurance. Yeah, floating. How do you apply? There are few things that you can apply. One, there's specific locations. Like the example I give you, maybe there are only 3 office, one in Penang, one in JB, one in KL. So the stock floats around in these 3 premises. It could be today, they can send to JB, tomorrow they can send to Penang, and this stock float. So it's very difficult for the insurer to say KL is so much because KL stock tomorrow may be different, So that's why you have this endorsement to say I can declare 3 locations in my policy: Penang, JB, KL. And the sum insured, maximum sum insured in any one time in any of these 3 locations could be 3 million. So I insure 3 million, right? So your 3 million, sometimes today, 500,000 can be in Penang, 500,000 can be in JB, 2 million in KL. Tomorrow or day after or next week, your 2 million in KL becomes 1 million, then your Penang becomes 1 million, JB becomes another million. And next month, it change again because you have customers everywhere. Your Penang may be 2 million, KL may be 500,000, JB may be another 500,000. So it changes, floats in 3 locations. So you have this extension, you are quite safe in the sense that I don't have to make sure the sum insured must be exact in every location. So I have 3 million stock floating around within 3 locations. So you can apply that, under specified locations. Then what about you have many locations? How I'm going to cover it? Can you cover under floating based on unspecified location? You have 10 locations. The condition is that you must have minimum 10 locations. Each location sum insured must not exceed 500,000. That's the limit, yeah. And you have to charge 25% loading on highest location rate. We charge at the 25%. So you can have a total sum insured of say 5 million, right? And floating around in 15 locations. You don't have to name it. You just put in this condition, unspecified locations, total sum insured 5 million, covers all my locations, right? For 500,000. You can do that. The other part of floating insurance is unspecified homogeneous location. Your location is many, few hundred, 1,000 locations. And each location not more than 5,000. But this one, you have to declare your total value of stock every month in order to enjoy this. Yeah. In other words, it's more applicable to those convenience stores. Convenience stores, you have thousands of locations, hundreds of locations, thousands of locations. Let's say 7-Eleven, 99 Speed Mart, KK Mart, all these have many locations. This is useful for them because they don't have to estimate every location I must insure so much. Of course, if they can do that, of course, it's the best lah. That is more accurate. But sometimes you cannot do that. Then you use this floating insurance condition to 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 lower the administration cost of determining in every location what is my value. Okay. Tenants clause. Tenants clause is when you're the landlord, you insure the landlord, you're renting out to a particular person. Here, you put tenants clause means to say the interest of the owner, which is the landlord, is protected in the event that tenant change occupation or increasing risk without knowledge of the owner. Sometimes when you rent the place to the tenant, they may change occupation without letting you know, so you also don't know as a landlord. So with this condition, you are safe. Right? Even they change occupation, also no issue, because under this clause, it allows you to do so with additional premium of 10% of basic rate. Right? Remember one of the policy conditions that I mentioned this morning? It says that if there's a change in occupation, change in the risk, you must inform insurance company. So if you don't do that, then you have not fulfilled that condition. Then policy again claims it will be a challenge to do that. So with this clause, you're not worried about changing occupation if you are the landlord. Yeah. Rent, you can also cover rent. Basically, you can cover if you're the owner and not occupying. You can also cover owner and you're also occupying the building. You're also covering both tenant and occupier also can, right? So how you want to insure it is stated or number of months rent insured which the insured is legally liable to pay, right? That means if your building, you are the owner, you're not occupier, if the building is burned, you can buy number of months rents insured, which the insured is legally liable to pay. That means we cannot pay you, no place to stay, so you can claim under this. Yeah. Waiver of subrogation rights insurer. Remember, in the policy condition, one of the conditions says subrogation, right? Right. The insurance company has the right to subrogate from a third party which we feel that has caused the damage, caused the incident to happen. We can subrogate it from them. But sometimes the insured doesn't want the insurance company to subrogate, especially when it is a subsidiary company or is related party. They don't want you to go and subrogate their own company, brother, sister, So they ask to include this waiver of subrogation rights, which means insurance company cannot go and subrogate the loss from another party. In this case, you have to name the person that the insured does not want insurance company to subrogate. Maybe it's a group company, group holdings company. So he doesn't want to subrogate from his subsidiary. So you have to name it ABC, XYZ, into the policy. And each insured that you want to name inside this waiver will be charged at 0.05%. Yeah. Okay, now those are all being charged upon inclusion. Now we look at premium charge only when you declare, right? Your capital addition, you include capital. That means during the period of insurance, you may add machinery into your policies and you didn't declare to us yet. So you're still being covered if you put this capital addition. This is only allowed if your sum insured is more than 1.5 million on your stock, on your equipment, on your building or on your equipment, not on your stock. Stock cannot have a capital addition. Okay. It covers your alteration, improvements, or additional buildings, right? And once you acquire the new equipment, after 90 days of your inquiry, after 90 days, after you buy the goods, 90 days, then you need to inform the insurance company of that additional capital addition, right? minimum 10%, 1 million only you are covering you. And increase to 2 million if you have more than one location. Yeah. Okay. So in other words, we give you cover for 90 days for any additional items that you want to cover but you haven't informed us yet. But after 90 days, you need to inform the insurance company that you have now included whatever item. Maybe you have bought a new machine or whatever. And that 90 days, you have to charge. You will be charged based on the amount of additional items that you have purchased. Yeah. If you have purchased additional 2 million, then you charge prorated on the 2 million. B, internal removal. You remove your items to another location and you have not informed us. Okay. Once you know that you have now moved to another location, maybe an equipment, you may have loaned it to another subsidiary to use, overlook to inform us. Once you know that has been done, you need to inform to the insurance company that this particular equipment is now not located in my place but located somewhere else, and you need to charge accordingly. If let's say you move to a location where the rate is higher, then we have to charge based on the rate, that particular location rate. Yeah, so that's why it says upon discovery, you need to declare and premium will charge accordingly based on whatever rate that is charged on that particular premises. Yeah. Automatic hold cover is you now acquire a new location. Maybe you are we are a marketing arm. You now open a new office somewhere, another new place, another town. You didn't inform us yet. You have this. You're automatically holding you cover for 30 days. Right? After 30 days, you need to inform us, the insurance company, that you have now a new location that need to be added into the policy. The limit is 10% sum insured and 1 million sum insured, whichever is lower. Declaration policies, this is more to address the fluctuation of value of goods. Your stock may be 1 million today, tomorrow 1.5, 1 month later 2, depending on your sales, right? So it's fluctuation in value of stock. So if you just say, I want to insure 1 million, may not be correct because it fluctuates. So with this clause inside, you'll be able to manage this fluctuation. Condition is your stock must be at least minimum 500,000. How does it work? I show you an example. Firstly, you must be able to insure to the maximum sum insured. That means you think at any one point of time throughout the policy period, your maximum value of sum insured could be 5 million stock, for example. Right? In my example, I say the maximum my stock can go up to is 6 million during the period during any one day of the period. The maximum is 6 million. Okay, so I cover 6 million. So in January, I have 5.5 million, 5 million, 6 million, whatever. This is my declaration. This is my monthly sum, the sum insured that I'm covering. January 5.5, which in 6 million is 5.5. The highlighted 6.26 million is because my stock, my value declared to me covering at 6 million. So if the month of May 6.2, I'm not covering you 6.2, I'm covering you 6 million because you only declare 6 million maximum. So I'm covering you 6 million. So I will take 6 million. So you add up all this, you average it out. The total monthly sum insured, you add this column out, is 666,100. You add by 12, it's going to be 5.5 million. So 5.5 million times your 0.5, you only get 8262. Originally, I charged you 6 million, right? So times this rate, 0.15, is actually 9 million. Originally, when you first insure first take up the policy, you have to pay 9 million premium. But at the end of the policy period, after the declaration, my average per month is only 5.5 now. So times the rate, I'm only charged as 8262. So at the end of the policy period, or maybe the first month or second month of the next year, and then after the declaration, I will have to refund you, the insurance company has to refund you $737.50 because the average per month is only 5.5 instead of 6 million. Yeah. So that's how this declaration works. Yeah. So it's important that the original sum insured that you insure has to be the maximum amount that the insured thinks they will hold at any one point of time. Just like this example, if the stock actually for that month is 6.2, but you're only issuing 6 million, actually for that month, we are only covering you 6 million. If there's a loss in that month, we are only covering you 6 million, not 6.2. You're over-insured. Yeah. Okay, we have finished those that is charged upon declaration. Now is FOC. Temporary removal, you remove your machine for modification repair elsewhere, you're also covered, but doesn't include while in transit. You don't include while also includes while they are in transiting. The second one is removal of debris. Earlier we said removal of debris, we need to put in sum insured, and we charge the sum insured. This one, there's no need to put in sum insured. We will still cover you, but only for a certain sum insured, which is 10% of sum insured or 2 million in total. That means the maximum we cover you 2 million or 10% of sum insured. If you don't declare it free of charge, no need to charge. If you use this without separate sum insured. Same thing for architecture, surveyors and consultant, without separate sum insured, will also cover you free of charge. No need to pay if you put this in without separate sum insured. But the limit, there's no additional limit. It's just you're insuring 5 million. It will be part. This additional cover is actually part of the 5 million that you have insured. Your sum insured that you have used 5 million is 5 million. Right? If let's say this architect surveyor's fees is cost you 500,000, your sum insured is 4 or 5 million. So you only left 4.5 million to cover all the other contents. So the thing is that whether you think it's sufficient or not, when you want to use this without separate sum insured, the insured must be aware whether my sum insured that I insure is sufficient or not. Okay. If it's not, then it becomes underinsured again. Yeah. So the best, of course, is to have a sum insured declared. Then it then saves you of the trouble of whether my sum insured is enough or not. Other contents clause means to say you have this clause inside, we give you additional cover for money, stamp, documents, manuscript, and so forth, as stated there, for $1,000. Remember, in my policy condition, these items are actually excluded. Yeah, you don't cover any of these items mentioned here in my policy condition. Now, with this clause, I give you $1,000 cover for these items: money, stamps, documents, manuscript, free of charge, no need to pay. Reinstatement value clause means sum insured is based on cost of replacing or renewing a property at the time of reinstatement. That means to say the sum insured is based on new equipment's value or the reconstruction cost of the building, not the market value of the equipment. Right? Means to say the sum insured must be higher than the market value. Obviously, because of inflation and the market improvements and things like that, to buy the same machine new will definitely cost you more, right? Because your old machine, if you use market value for depreciate and so forth, then the sum insured will be lower. But if you use this clause, you must make sure your sum insured is up to the value of the new equipment. If you don't include this clause inside, then automatically the policy is under market value. That means it's based on the market value of the item, like your vehicle. The market value of vehicle definitely will reduce when it's getting older, right? New car 100,000, next year becomes 80, 2 years, 3 years down the road becomes 50, 60, and so forth. That is market value. Temporary storage, if you store your goods temporarily for somewhere else for less than 60 days, then it's free lah. If it's more than 60 days, then we have to charge. Then you have to inform the insurance company already. You need limited to 500,000 maximum. Outbuilding, you include this, that means it covers your gates outside your compound, your fence, your extensions, the annexes, your whatever that is outside your main building. You're also covering those, right? You should include this clause. You don't include all this, will not be covered unless you specify in your description, like on building, including wall, gates, fences, small buildings, extensions. If you describe it in the items insured, then obviously you are covered. If you just say on building in your description, then this will not cover unless you include outbuilding. The rule is if you want to do this, can, but make sure your sum insured is adequate, right? Because when you determine your sum insured, maybe you overlook to include the cost to rebuild your wall, gates, fences, and buildings. You only your sum insured only based on the value of the building, not including this. So you want to include this, make sure your sum insured is adequate to cover this as well. Yeah. Vehicle load, it depends on the manufacturing. Sometimes when you deliver your raw materials, they have not enough time to unload it into your factory. So the lorry is parked within the compound of the factory, but overnight in the lorry. So if there's a fire, even the lorry also can be burned together with in the factory. And if you don't include this in, then the goods in your lorry will not be covered. If you include this in, then it will be also covered under if there's a fire. Yeah. Alteration and repairs. If somebody goes and do some repairs in your property, provided everything is the same, your occupation area is the same, you go ask workmen to go in, carry out alterations, maybe do some repairs, then you will also be covered if anything happens during this alteration and repairs. Yeah. Every condition of average, every single item is subject to average if the overall sum insured is still adequate. Okay, what does it mean is to say that say you have item 1 building, item 2 stock, item 3 equipment, 1, 2, 3. So you don't have this condition inside, then every item is subject to a average. Let's say item 1 building, and building is underinsured. So average will apply on the building. However, stock in trade is adequate, is sufficient. So average won't apply in stock. But item 4, equipment is underinsured. So average will now apply to the equipment. However, if you include this aggregate condition of average clause, which means the average applies only when your total sum insured, which means your item 1, item 2, item 3, building, stock, plant, added together is sufficient, then no average apply. Compared to every item is subject to average, right? So that's the difference between normal policy wording and when you include this aggregate condition of average, which combines everything to determine whether average applies. That one, if it's not, then every individual item that is insured is subject to an average.
Mr. Yap, there is a question in the chat
Yeah.
box.
Yeah.
For a bungalow house owner, would it cover solar system for TK and lightning conductor ROD?
Lightning conductor. Depends, because if you just say building alone, then the building does not, it will not include your solar panels, like either the lining elasters, right? So you want to include it, you have to put it inside. That means building, including solar panels, electric rods, and so forth. Yeah.
Okay. Another question. For this free clause, normally insurance company will or will not put it to the policy for the benefits of client, or we as an agent have to inform company to include it.
Depends on, I'm saying it in a general term lah, yeah. General term in the sense that some companies will give you automatically, those that is free of charge will give. Some companies may give certain, some companies may give not certain. That means not all will be given lah. For example lah, yeah. The one that I'm looking at, let's say contract price, right? Contract price, some companies may not give you because we are also not sure whether the insured wants or not, because this is applicable to a contract where you already sold the goods. So when there's a fire, when you have already done the deal, so your amount of claim is based on this contract price, not the what you call cost price of the goods. It's including the contract. Contract price could also include some element of profit already lah. So you include this, then yes, right? So obviously, if you are manufacturing, yeah lah, you can include this. But you are not manufacturing, then you don't need to put this, right? So that's why I'm saying sometimes it all depends on the type of occupation before we apply, right? So that's why I'm saying some companies may not give this, depending on the insured, some companies may give. So it's not 100% that every company will give. So the best is, if you want, you ask the insurance company to give, or you ask the insurance company, hey, my standard policy, higher policy, what additional clauses do you give me? Look at the quotation. What did they give you? So you'll find that certain clauses applicable to insured. Then you say, hey, may I add this in, lah, yeah. That's the best thing to do lah. Look at the insurance quotation. What additional clauses free of charge is allowed in your quotation. I mean, this slide will be given to you. You can compare lah. You know, this is given. Okay, good. You know, I'm sure some of these FOC will be given lah. I don't think insurance company will not give anything. Some of them definitely will be given lah. Yeah. So look at your quotation lah, basically lah. Hope I have more or less answered your question lah. Yeah. Sorry, I cannot give you a perfect answer because no insurance company do the same for these FOC clauses. Oh, okay. Computer record clause is
Sorry, Mr. Yap, your slide is missing again.
yeah. Okay,
Yeah.
okay. Do again.
Right, sure.
Okay, can see again.
Yes, and also there's another question. GEGM gave all this FOC clause, right?
I'm known it as an advisor here, so I'm not sure whether all are given or not lah. So I need to check lah this one. Yeah, I'm sorry, I can't give you an answer because I'm not really doing the day-to-day kind of work here. So I'm not 100% sure lah. But one thing I can tell you is that most of it will be given lah. I think most of it. What you can do is you can ask your marketing to serve you and ask them when you do a standard policy, what standard clauses will be applicable under the standard kind of occupation lah. Yeah. Maybe you can ask, if I'm insuring a, say, condo, for example, what are the additional clauses that you include for me? You can ask them lah, then you will know. but I cannot give you specific in it in the first place because it all depends on the occupation also. Because some of the clauses not applicable for certain occupation. Hope I answer you that lah. Yeah, yeah.
Yes, he answered in the chat box. Thank
Yeah.
you.
Okay, computer system record is talking about the value of material and cost of labor of computer time reusing the record. That means if your computer records is damaged, this will also cover you the cost of labor to reinstall your data inside your computer. Then reinstatement of compliance with the requirement of public authorities. If let's say after a loss, the authority requests for you to build certain things to comply with their new regulations, then these particular new items that the public authority requested will also be included as an amount, as a payment to, as part of the claims. Yeah. Okay. For more clarity, mortgagee clause is for people who do financing. So it clears that you must then inform the finance company or the bank if you want to do anything, you want to cancel the policy, you have to inform them first, and so forth. And if there's a change in occupancy, if you have a finance, you have a mortgagee clause, you cannot go and they claim liability because you have a condition of make sure you must inform insurance company when there's a change in occupation. With this mortgagee clause, you cannot invalidate the policy even though they have changed the occupation. That is the condition in the mortgagee clause. Foundation clause, be careful because you put foundation clause as is an exclusion because it excludes the building under in the ground because the foundation is in the ground, so you are not covering the foundation. Okay, reason for doing that is some insurer wants to do this because they want to save costs, because chances are if you're a small 1-story, 2-story building, you want to exclude the foundation so that your sum insured is slightly lower because foundation usually won't damage when there's a fire, yeah, because it's under the ground foundation. So you want to exclude it. So people want to include this foundation exclusion. Yeah. There's also the reason why I said I cannot specify which clause to put in, because sometimes you say I want to put a standard in the foundation exclusion, which your insured may not want to do that. They want to cover the foundation. So this one, obviously, there's no automatic to be included because it's an exclusion. Yeah. So it's a request from the insured. Destination is something to do with what is being defined in the company, in the insured's books. What is this? What is this? That means when there's a claim, we don't want to know what is it about. We just pay you. Don't want to find out what this is meant to be, So we just pay you based on this. No need to investigate. No need to find out what is this. Just if it's lost, it's damaged, we just pay. Pawnbrokers is just meant for pawnbrokers. You are insuring pawnbrokers policies. This is to clarify how you want to settle pawnbrokers claims. Certain conditions that you need to apply. Basically, is something to do is goods plus 25%. That means whatever you cover, you plus 25%. Co-insurance, when there's co-insurance or leader, co-insurance clause is when your policy has a co-insurance. That means there's another insurance company sharing the particular risk. Maybe GGM maybe 50%, maybe another company could be covering another 50%. So this clause will be ultimately included just to specify that every co-insurers will act as though they are own insurer itself. That means act as though they're insuring the property itself.
Mr. Yap, can I ask
Yes.
a question on this foundation? And I am not sure whether is it correct with the risk. There is a recent act for high-rise building that is compulsory that when they take insurance that they must include subsidence and landslide cover.
Yeah.
Is
Yes.
it under the act?
I think so. I'm not very sure. I'm not sure.
Oh.
I'm not very familiar with the act, so I'm not really sure about that. I'm
Because
sorry about that.
it's when we insured this condo now with this, I think one of the reason I think they add in because of the we have few incidences of high-rise building being collapsed. So
Okay, understand. You ask me, it's always good not to include this lah. What's my opinion lah? Because you never know. Like you say, if there's a landslide, right? Landslide, sometimes foundation can be weakened, and you're excluding this, then it's not good lah. Right? So it's
that's
best not to include this particular clause inside lah.
no, I mean from the view of the client
Ah.
side, I think they should, isn't it?
Yes, they should.
So since it's compulsory,
Yeah, they should. If it's compulsory, they should. Otherwise, if it's really stated compulsory in the act, then obviously you have to include. Otherwise, the management corporation of the particular condo, right, will be in trouble because they're not doing their job, right?
So you are not sure whether is it compulsory?
I'm not sure, but whether it is inside or not, to me, for high-rise building, is always not good to put this exclusion inside to save some premium lah. Should include it inside.
Not good to put in this clause.
Yeah, not good to put in this clause because it excludes your foundation, right?
Yeah.
So you don't put, then your foundation will be covered.
Yes.
Yeah.
Okay. Yeah. Thanks.
Where are we now? We are here. Okay. So you still have a few more to go. You get automatic renewal clause. That means you renew a policy automatically. That means you don't have to advise the insurance company to renew, but policy will be automatically renewed. If everything is the same, no claims, everything stays the same, no increase in risk, your policy without even informing us will be renewed automatically. But usually this applies only with injunction and mortgagee clause. When the bank is involved, usually they will request for this. Leasing endorsement is the same as banks, the financial institution, the mortgagee clause. It's just that this is, instead of mortgage, this is leasing. Okay, so it works the same way. Brand, trade, and trademarks. Trademarks is salvage value of goods with trademark will be determined after removal of debris brand. That means to say, you want to salvage the value of the goods, you must then make sure your trademark, your brand has to be cut off. Therefore, you see some salvage goods, when you want to go and say you want to buy some of the salvage goods, sometimes it's available. You will see the brand is taken off, is cut off. You cannot see the brand. Yeah, this is one of the conditions in the policy that if that's the case, you have to do that lah. Yeah. Hire purchase, similar concept as leasing endorsement and mortgagee clause. The only difference is for hire purchase, when there's a partial loss, the payment will back to the insured, not the hire purchase company. Where it's leasing and mortgagee, when there's a partial loss, you also need to inform that bank or the leasing company that there's a partial loss, this is the amount that is paid for them to discharge off the payment. Unlike hire purchase, only total loss we need to inform them. Otherwise, we have to pay directly to the insured. Appraisement clause is something to do with your inventory. We don't need to check your inventory, what is this, and so forth. We just pay based on what you declare to us, but not exceeding 5,000. Agreed value endorsement is something to do with some insured, where both sides, insured and insurer, agrees that whatever is it, my sum insured when there's a claim is this amount. This is more applicable to antiques or paintings because painting antiques sometimes has no, I would say, has no fixed value. It depends on the buyer, the person who likes it. Maybe some people who likes it may give you 10,000, or sometimes they give you 20,000. So it's not a fixed market value. Neither there's a fixed restatement value. So it depends on buyer seller kind of thing. Yeah. So now if you want to insure this item, it has to be agreed value between insured and insured. You say it's 10,000 and the insured is for 10,000, insurance also agree. Then when it's a claim, we just pay you 10,000, no average apply, and that's it. Just agreed amount, 10,000 means 10,000. That's why you call agreed value endorsement. Only applicable to special objects, art objects, paintings, antiques, where there is very difficult to get market values or even restatement value. Is I like, you like, I pay you. That's it. Self-insurance, that means you self-insured a certain amount. In other words, insurance company, they say, I only cover you 80%, 20% you gao team on your own. If there's a loss, I pay you 80% of the loss, you gao team 20% of the loss. Right? But of course, the premium that we charge is only not 100%, we based on the 80% that we charge. That insurance company is covering 80%. So we charge based on the 80%. Other insurance is like condition 3. You must inform to us what is the other insurance companies that you have, that you also insure the same item. Pays and set clause is it allows us to pay pro rata if there's a pair or set. A set, one item is lost, the other is other. One item is lost, but the other item is still around, but it's one pair. So we will pay based on prorated. Property damage is to clarify that it only covers physical damage to the computers, not the content, not the software in the computer. You only covering the hardware only. Yeah. Unvaluability clause is to strengthen the principle of indemnity. That means we pay you based on what you lost, not on the value. It's not a agreed value policy like the agreed value clause that we mentioned. The entire policy is not an agreed value policy. It's an indemnity policy. It's paying you based on what you have lost. Okay, this is to clarify that this policy is as such. Okay, we finish clauses, endorsement, and so forth. Okay, we move to the next one, risk exposure. When you talk about risk exposure, I divided into two parts, which is fire hazards and moral hazards. What are the exposures that we find in the policy, in the particular risk? We have the fire hazard, we have the moral hazard. What do you find in fire hazards? What are the common things of a fire hazard? Number one, electrical equipment and wiring, right? I divide into three categories. One is worn out and tired. Tired means used too much, tired. For example, all the electrical equipment, it can be worn out, it can be dirty, it can deteriorate, installation is deteriorating, electrical short circuit. Yeah, these are all worn out and tired equipment. The second part could be due to improper use equipment. You overload the cords, that means you do a lot of extensions within one outlet. You're going to overload that electrical supply, too much usage of voltage. So it can then create a short circuit. You use the electric appliance wrongly, and then you also could be because damaged, the cords are damaged and still continue to use, Then the third part could be also because of accidental occurrence or operator error. In other words, accident could be something that you use drop into the equipment, then the whole thing jam, and it can create a short circuit. Okay? Or the heating is left on for 24 hours. too hot, it ignites. Then it becomes a fire. Wrong installation, defective installation, didn't use the machine properly, poor maintenance, all classified under accident occurrence and operational error. Want to highlight to you is that I think a week ago or so, in the papers is highlighted that majority of our fire is actually due to this electrical equipment and wiring. Wrong usage, wrong wear out and things like that causes the fire. So it's one of the major fire hazards that we seen and has caused the fire. Then you have liquids and gases. You have some application will use gas, use kerosene, use a lot of solvents to make certain goods, things like that. And if there's improper storage and it's not well ventilated, then it can cause ignition. Then the fire can happen. Why? Because there's no proper storage of these chemicals. There's no proper training for the insured, for the employees of the insured to handle these chemicals. There is also no compliance in the safety requirements to handle all these chemicals or flammable liquids. Then, if that is not properly done, it is another area where a fire hazard can occur. Right? Remember earlier, the very beginning of today, I talked about fire triangle. This is all related there, where there's ignition, there's heat, there's fuel. This is where it comes to all the fire hazards that you can see and or most likely happen in the fire. Improper storage, housekeeping, you can see workplaces very cluttered, storage of stock improper, the stock is stored everywhere, and you want to walk also hardly can walk, Then you see a accumulator of dust in the factory, a lot of waste everywhere. These are all relating to fuel, additional fuel for the fire to burn. Rubbish thrown everywhere, careless disposal of all the combustible materials can actually start a fire. Poor housekeeping, fire exits are blocked, cannot even exit, no place to exit. Fire extinguishers blocked, cannot even access to the fire extinguisher firefighting appliances because it's blocked. Proper storage of hazardous goods, these are all improper storage hazards we have just mentioned, disposal of waste, all these are improper storage and housekeeping, which is a fire hazard. As far as when we assess the risk of concern, this is the fire hazard to us. Then you have your heating equipment. Certain processes produce heats and dangerous, especially when you do a process of plastic, you need to melt, then you have to do sorting and things like that. So the entire process is dangerous because there's a lot of heat produced. So you need to have proper handling of these machines. Also have a good SOP in how to handle the process. So heat producing appliances normally have high temperatures, and that high temperatures, you're not careful, will do an ignition. We have an ignition. An ignition because of the fuel, poor storage, housekeeping, chemicals not properly stored, that will be a fuel. And there's ignition, there's fuel, and there's oxygen, and the fire will start. Yeah. There's also friction. When you produce food, rubbing two things together is friction. This is the ignition source. So we also need to know, are there anything like that happening where there is friction? Can it be easily created? What we do, we have to make sure that heating equipment has to be regularly inspected, maintained, make sure combustible materials are removed from such, are not kept close to this kind of heating equipments. Yeah. A machine should also have automatic shut off features, and you must make sure the employees know what to do on the safety of handling these machines. Yeah. So these are very important factors that the underwriters will need to understand the risk. The last part, block fire exit, inadequate fire safety equipment, and so forth. Yeah. So as I said, mentioned, improper storage, housekeeping, fire hazards block, cannot even get to the fire safety equipment to those of the fire when it's still small, things like that. So you must also have fire drills. We also must have proper maintenance of fire equipment. It's important lah. Yeah. These are fire hazards, but some of the hazards that we see recently or last few years is of course flood. I'm sure you all know flood is now happening every day, every year, I would say. Last time, 20 years ago, maybe once in a few years. Now is once in every year. You also have this. So insurance companies are very concerned now about flood, right? Definitely, there will be flood every year. See whether how much the insurance company will have to pay for flood damages every year, right? This is a major challenge for us to mitigate these flood losses. Yeah. What pointers can we give to our insured? We have to regularly clear debris from drains and ditches so that the water can actually flow better. For factories, you may want to think of installing floodgates, water barriers. Floodgates is when the water comes in, then at least you have a floodgate to prevent the water entering into your premises or delay the water entering the premises. Hopefully, you delay the rain may stop in 1 day, 24 hours time, then the water will subside. So even the water that goes in, they will be minimized. The loss will be minimized. Yeah, you have this installed. Then you can also have sandbags to block the entrance. Whatever. This is the easiest way to do it. Cheapest and easiest way. Get ready sandbags. And when there's sandbags, when the water comes in, at least you put sandbags across. Doesn't prevent the flood water from entering, but delays the process of entering water entering the premises, and also reduce the water entering to the premises so that if they're lost, the loss can be minimized. Yeah. The last thing you can do is also move whatever furniture items to higher ground, or you have a second floor, move to top floor, move to a higher floor, or put your higher value stock store in the higher floor, or you can raise up the storage level, maybe to some planks on the floor to raise up to maybe 2 feet. At least if water only rise up to 1 feet, 2 feet, at least the damage is also minimized. Yeah? So these are the areas that insured can help the insurance to reduce the loss amount, put it that way. Yeah. I'm sure you know if the area is always flooded, you'll find that insurance company will put a higher excess on the flood cover or on those premises that's always quite frequently flooded. Yeah. So to avoid this, maybe the insured can help themselves to also do what I just suggested if it's practical for them to do it. Another area that is concerned, especially for condos, is lightning. Right? Lightning will strike for the shortest path between the cloud base and the ground to complete. Where is the shortest path from the cloud to the ground is actually the condos, where it is high-rise buildings, right? High-rise building condo is quite high. Now you're talking about 30 stories, 40 stories, So all this, the lightning will aim for these places first. And that's why you will find a lot of lightning claims on condos or high-rise building. Office buildings not so much, because I think the construction of office buildings are much better to prevent the lightning from striking the building compared to condos. I think condos, the prevention method used to avoid lightning strike is not as good as those in office buildings. That's why you see a lot of condos. Lightning strike is apparent, and when the lightning strike, usually is damage the lift. Yeah, that is where we pay a lot. insurance company has to pay a lot to repair the leaf. What we do, what can be done? Condos have to buy quality surge protectors, shielding components, like good lining arresters, and so forth. To reduce that kind of impact. Another area that is concerned is bursting of pipes. You see quite a number of claims because of this, because of poor installation, weak joints, incorrect fittings by the contractor, corrosion. The pipes could be blocked, and when it's blocked, build pressure within the pipes, and at the end, the pipe can burst because too much pressure inside. High water pressure. Right? Some pipes are designed to handle a certain level of pressure, and it's too high, the chance of water or pipe burst is there. Yeah. The last part we are concerned is always neighboring. Sometimes the neighbor is so near, and the neighbor is actually hazardous factory, and it actually spreads quite easy to the next. Okay. Moral hazards. You also look at moral hazard, financial. The company may not be doing well. Human relationship. With a lot of foreign workers, the management and the staff may not have a strain, and they could be involved in strike. As I mentioned, it may be a strike because they're not happy. Claim experience. There may be a lot of frequency claims of the insured. If frequency claims, that means the insured may not be able to manage their factory well. Claims could be inflated. Management attitude will be thinking of what safety precautions the management do. Maybe they look at safety as a priority for them. Maybe they are not bothered about any safety. They want to look at more production. What does the management do on risk management? Then if we implement certain risk improvement, the management attitude is tidak apa attitude, doesn't matter Yeah. And is the insured underinsured? Background, does the insured switch insurers very often? Does the insured have qualified personnel to manage the operation? Right? It's important because they need to manage and they need to educate their workers to make sure machines are handled properly, things like that, Okay. There's hazards. Now we look at how do we rate? Of course, I'm sure this is very familiar with all the agents already. We briefly go through. Of course, the rating is based on the construction 1A, 1B, 2, and 3. Then you add on the covers, additional covers that we look at. Then you also look at what warranties you need to include. Certain warranties you need to buy back the cover. I explained certain warranties just now. Hazardous goods, spray painting, cold storage printing. All this needs to be included. Give me 1 minute, 1 minute. Okay, basic rating depends on your occupation, depends on your construction of the building. Then you add your value cover you want to add. Then your warranties to buy back certain cover. Then of course you have discounts depending on what type of firefighting facilities you have. A list of discounts that can be allowed. Okay. Then rating also depends on what kind of policies are using. You're using a standard tariff policy wording, then of course rates are fixed from the tariff itself. Of course, now because it's the tariff environment, certain policies are under the tariff. If it's under the tariff, there will be some flexibility in rating allowed from the basic tariff rate. It can be -30, -50, or even up to -40% of the tariff rate, yeah, allowed. That will depend on which insurance company provide which type of the tariff product. GGM will have its own the tariff product. I think there will be this another session which provides what kind of other policies we have, I think. But my section is totally talking about standard fire policy, main cover, and all the conditions. Yeah. Then you have this industrial all risk policy, IR policy, which covers section 1. Is actually an all risk policy talking about accidental physical loss, not talking about perils and fire, lightning losses, talking about accidental physical loss cover. Then section 2 is the business interruption or loss of profit policy. So depending on what type of policy is being used, standard tariff, of course, is fixed. The tariff is some flexibility. Industrial all risk is, again, another type of policy where cover is much better. Rather, it's an all risk policy. Rating also will be different. What kind of rating, level of rating, is less than 10 million. Obviously, it's a standard fire tariff that you have. It is 10 million to 100 million. You call it self-rating, where certain discounts will be given, like high sum insured discount, security discount, and so forth can be allowed. Then you have special rating by special rating committee, which is under the industry, PIAM, will give you a rating if you submit all the information to them. That's for 100 million to 300 million policy. Yeah. Then you have LSR, large and specialized policy that's more than 300 million. This is under the market rate. There's no special rating, there's no fire rate, it's market rate. So depending on which company can quote you a better rate, you know.
Mr. Yap, there is a
Yes.
question in the chat box. If an establishment does not have bomber certificate, will it affect the policy when it comes to a claim?
No Burma, that means you don't have a certificate, right?
Yes, it states here, yeah.
No, it won't impact as long as we are aware of it, and we will still cover you. It won't impact. There's no condition to say in the policy to say that you must have a CCC certificate of what completion or something like that.
Thank you.
Okay. Just now I did mention under the special rating, the following were taken into consideration, which is the last sum insured discount, security discount. With a new building discount, there's a discount for new building. If your building is already more than 15 years old, then there's a loading imposed as well. Perils rate, which we mentioned earlier, there's a rating for the perils additional cover, will also be discounted based on the sum insured, amount of sum insured, discount allowed for firefighting facilities that you have. Then the how you compute the discounts. I give you an example. If you are 20 million, your rate is 25 cents. Your FEA discount of 2.5 and 5%. New building discount, you have 5%. Security discount, you have 2%. What you do is your new building discount or security discount is actually after your FEA discount. Example, 25 cents less FEA discounts, then the half, 23125. Then it is 23125, then only you less your 7%. That means is your building and security discount is after you have less of your FEA discounts. Yeah. That's how it works. This is just to let you know that this is how it works when you apply the discounts. Yeah. for special rating policy, special rated policies. For construction, there is class 1A. I may not want to go through it, just that is all non-combustible materials is 1A. I think every session that you attended on fire, this will be highlighted to you. So we just briefly go through 1A. Basically is all non-combustible materials. If, however, there is an extension of 10%, like what the program, like the diagram shows you, then you have to add a 10% loading for on the class 1A's rating, yeah, like this 20%. The extension is less than 20%. If it's more than 20%, it will go to 1B. And if it's only 1B itself, it is partly bricks, partly non-combustible materials, then becomes class 1B, right? Similarly, if it's 1B, it's a 1B construction, you have an extension, less than 20%, there's an extension here, open-sided extension, less than 20%, ultimately it goes to 1B plus another 10% loading. If it's a class 2, it's more than 20% extension, then becomes a class 2. Right? Some diagrams to show you what is a class 1A, all bricks here. Class 1B, partly bricks, partly collapsible sheets here. So it is a class 2. If this one is 80%, these collapsible sheets are 80% of the whole structure, then it actually is class 2. Yeah, more than 80%, then it's class 2. Then your construction 2 is basically all collapsible sheets, right? No bricks, all collapsible sheets and also open-sided with columns. Yeah, so it becomes class 2. This, from a diagram, you can see in coastal 20%. Non-combustible is this is bricks lah. Basically, this is considered bricks lah. This is collapsible sheets. This is 80%. This is 50-50 lah. We say lah. If this collapsible non-combustible materials is 80% or more, then it becomes class 2. Yeah. Example of these collapsible sheets that you can see. This is open-sided, class 2. Class 3 obviously is anything that doesn't fall under 1A, B, 1B and 2 will be class 3 lah, right? Or if it's open-sided, but your columns, your foundation columns are non-combustible, then it's still considered as class 2. But your column is combustible columns, but open-sided, then becomes class 3. Of course, class 3 is all wood, yeah? Okay, the last portion I want to go through is some examples of how we compute. This is for your information. I'm not going to ask you to do exercise. I just want to explain to you how the computation works, yeah? So that when a marketing quotes to you, at least you understand how they compute the premium for you, yeah? Assuming this is a 2109 code, which is the printer, rate is 0.19%, basic rate, is construction 1A. Then you have your periods inclusive. This is the rate of the periods. You total 115. In total, it's 0.115. Because you have equipment, you now buy back the electrical installation B clause, which covers overheating, excessive use of the equipment, short circuiting of the equipment. So you included this. increase is 0.056, yeah, 0.056 here. So sum insured 5 million, building 500,000 equipment. So what we do is to compute the premium, it will be 5.5 million times 305. 305 is actually your basic rate, 19 plus your Paris rate is 305, 5.5. This is 16,775,000. Because you included electrical installation B, you have to charge this for the equipment itself, 100,000 times 0.056, which is 280. So you combine these two, becomes 17,055. That's just how you compute when you include installation B and also 3 additional periods. Example 2, 2902 coffee shop, restaurant. It's a restaurant. Basic rate 137, construction 1A. But this time, because of the extension, you have to have a 10% loading on Poseidon. Yeah, you have barriers included, your escalation clause 10%, your sum insured and building. How does it work? 12 million. The standard rate is 137 because you got a 10% loading on the construction, so it becomes 1507, right? Times 10%. Then you need to add your periods, which is total 129. So it becomes 2797, becomes 33,564. Because you have an escalation clause, right? Escalation on the building. How does escalation work? It's 10%. 10% of 12 million is 1.2 million, right? 10%. So 1.2 million times your rate here, because you only charge 50%. So it's 1.2 times 2797 times 50%. That is 1678.20 cents. Is in total, you pay 35,242. Okay. Example 3, a little bit more complicated. You have a PIAM code of 2902 coffee shop restaurant. Basic rate is 137. Your construction is again 10% loading, and this clause 10% escalation, sum insured 12 million. Sorry. This is the earlier one. Sorry. Okay. This is example 32722, a little more complicated now. Metal canes and containers manufacturing. Rate is 189, class 1B with 15% open extension. So it is 10% loading lah. Then you have the barriers. Then you also include escalation B. You got declaration 10%, you got escalation 10%. So you have another element of declaration clause. So how does it work? I explain it clearly. We need to load 10% on the building construction as there is 15% open cover, open sided extension. So it's standard rate times 10%, 2079. Policy is extended to include several periods, right? So 175. So I put 175. The total of this becomes 0.829. Premium just to cover this section is 6 million times 3829. This is the premium. Since there is equipment and you EIC 4B included, your sum insured for equipment is 1 million. So you times this 1 million times the rate of EIC 4B, 560. Then you have escalation on stock. Escalation is 10%, 500,000 times this. Again, it's 50%, 10% of the 5 million, and you get 19, total premium to 5448. Okay. And the last part is you have a declaration clause. Your declaration clause is Again, you will look at the declaration. Your sum insured is 1 million. By right, you are paying 3,829 because you have declared, you use declaration clause, the average premium, average sum insured becomes 912,500. Remember, you 1 million, you declare 1.2 for this month, for example, September, you have to take 1 million because your cover is only up to maximum 1 million. So you take this average 12 months, 1,912,500, therefore your computation is this, right? So your average clause 912,500 times your actual rate, your premium is 3,493.06, which means you have a refund towards the end of the period, 33504. Okay, so this is how the premium computation is being computed, right? And with that, this is the end of my session. Is there any further questions that you need to ask or clarify?
Yes, there is two questions in the chat box. If a restaurant has an outdoor area that is completely open air with no roof or covering at all, that does it still count as extending over 20% C1B?
Are you going to cover the area? You're cover the area like fixtures, fittings you have there and things like that. Then obviously you will have to charge 20% because you're also covering that portion that is outside. That means you are covering your table, chairs, whatever there is there. If you are covering that, then it is considered an extension.
So next question, how to calculate the sum insured of the building?
How to calculate sum insured of the building? That is a very subjective question. I also cannot give you a perfect answer because I'm not an engineer to build the building. The best way is to valuation, right? The insured may know better when they build the building, how much does it cost to build the building. Then you look at the inflation that may be incurred throughout that year. It could be 20%, 10%. So you have to add that additional 20% of inflation or whatever to that building. Of course, if you really want to know the actual cost, then you have to find a valuer to find out, right, the actual cost. So nobody, insurance company can actually not tell you exactly how to determine the sum insured because we are no expert in building a building. We don't know what it will cost like. It has to be a valuer that helps you to get the building cost. Example, you look at the condo. If I'm not mistaken, in the act, it says that they have to do a valuation of the building. Don't know how many years once. So with that, they can then determine the sum insured lah. For manufacturing, if the owner of the manufacturing will know how much they need to use to build that plant, So from there, from the costing of when they build it, then they may need to include inflation, right, into the cost of material and things like that. If roughly they know the inflation every year could be 10, 20, 15%, then they have to add that particular inflation to the reconstruction of the building lah. That I can only more or less advise you on this manner, in this manner lah. To give you exactly a formula, I don't think I'll be able to do it lah. Because it's not our trade to determine the how much to build a building or things like that. If you're not covering the building, you're covering the equipment. Obviously, then the insured will be in a better position to tell you because they will know how much is it to buy the equipment on the market value and how much is it if they want to buy it as a new machine. They definitely will know better when you talk about equipment because they are the one that purchase it. Unlike building, because building you need engineer, quantity surveyor to determine the cost of building the building.
Okay, another question regarding the outdoor restaurant we mentioned earlier. If we place it under C1B,
Hello.
all the tables and
IG
chairs will be
有问
covered
题，
as
奇怪
well,
有问
right?
题吗？
You depending on whether you want to insure or not. If you say you want to incur restaurant, including furniture, finishings, tables, whatever, then can lah. Then you have to cover it lah. Put it this way lah. Even you're not covering it, and you're operating outside the premises, that means you're operating in the open space, right? Correct? When you're operating in the open space, the open space rate is actually a class 3. So if you do that, then if your building is a class 1, that means your open space is more than 20%, then you'll be charged at class 2. You know what I'm saying? You look at the concept of open area when you do a risk when in open area, it's actually a class 3. So if you now look at this restaurant with stores lined up in the open space, then you are actually doing business in the class 1A construction together with an open space. So when you combine these two together, it will be then downgraded to class 2 if you have open space more than 20%. If you're less than 20%, then becomes 1A becomes 1B. Yeah.
Okay, another question. Can you go back to the foundation FOC clause and explain again why high-rise building not advisable to include subsidence and landslide peril?
Subsidence landslide, is it?
Yes.
Not covered? High-rise building?
Why high-rise building not advisable to include subsidence and landslide peril?
So, sorry, Mr. Yap, it's a foundation exclusion. I mean
Okay.
the foundation exclusion. Just now you explained.
Okay. The foundation exclusion actually excludes the foundation, right? Okay. So when you exclude foundation, if there's a damage, then we are not going to cover the cost of the foundation. We're going to cover the cost of the structure of the building if you have that exclusion in. But when it's a landslide, there's a huge chance that the foundation will be damaged, right? We don't know, right? Because your landslide subsidence is happening, the ground is not the land, the soil is actually deteriorated, a lot of land is lost. So there will be possible that your foundation is damaged, right? Therefore, it's always advisable not to exclude the foundation exclusion. That's what I'm trying to say. Did I answer your question?
So need to increase the summation, including the
Foundation, yes.
okay.
It needs to cover the foundation. When you do the sum insured, you must also make sure the sum insured is adequate to cover the foundation cost also. Put it this way, right?
Normally, the foundation got any answer for foundation? How many percent of the total building cost we need to include in the foundation cost summation?
I won't be able to answer you that because I'm not an engineer, I'm not a contractor. So that one you have to be given back to the insured to find out because when you build a new building, right? Obviously, the cost of building a new building will include the foundation. Right? That will be that value including the foundation.
That means, Mr. Yap, if no point if I add on the subsidence and landslide to the policy without include the foundation of the building.
Yeah. That's why you don't include the foundation exclusion clause inside. That's okay.
Oh, okay.
Don't include the foundation exclusion.
Okay. So I still can include the subsidence and landslide, but without include the foundation exclusion clause.
Yes, correct.
Okay, thank you very much.
Last question, where can we find a valuer? Can we appoint valuer from general insurance company? Any standard charges need to pay to the valuer?
That is independent lah. We don't have appointed valuers to do it. So you insured will have to find their own valuers lah. You search in the Google, there will be plenty of valuers lah. Real estate agent will have sometimes can offer this service lah. Check any real estate agent lah. They can offer you this service. Most of them will have this. Most of them will have that service.
Mr. Yao, I have one question. Nowadays, a lot of people they install the solar panel on the top of their building. So
Yeah.
when they install in the middle of the insurance periods, should we inform the insurance company?
You should, because your solar panel will not be covered because your original policy don't include solar panels.
If how about my client buy another policy cover for the solar panel, maybe it's a Oris
Can
insurance.
Then no
right?
need lah. Then your existing policy you don't need to cover because you already
Unless
got
they
another
want to
policy to
cover-
cover solar panel.
So unless they need to cover inside the policy for the fire and lightning, right?
Yeah. Unless they want to read together in the fire policy or house owner policy.
Oh, so
Then you need to
so they
inform the
can
insurance.
they can buy the separate policy like Oris. When fire happen, does they pay the claim? Because of separate policy.
Depending, if there's a damage due to the solar panel causes the fire, damage the building, then both policies will pay lah. The Oris policy will pay for the solar panel loss, and the house owner or fire policy will pay for the damage to the house lah. So two policies will then pay.
Okay.